Good morning, everybody. Welcome back to another episode of the Market Open. We are here today, Monday, May 12th. And if you are just waking up right now, if you are just taking a look at your portfolio, you are probably seeing a color that, well, we've seen for the past month, and it's been a pretty nice color. But on a day like this, that color is blistering green. It's not just green anymore. Folks, we are up. We are up in the pre-markets. We have official details on the China-USA deal, the S&P 500, up 3% in the pre-markets right now, 581. We are well over the 200-day moving average, and it is absolutely a color we are like. I woke up this morning, and the type of moves that I was seeing in the pre-market, I mean, obviously last night it was pretty aggressive. If you're on the future show, we saw Robinhood at almost 57, NVIDIA at almost 120. I mean, it was green. This morning was a whole different level. Robinhood is pushing 60 right now at 59. Tesla was at 312 last night. Tesla was at 270 last week. Right now, it's at 321. SoFi back above 14. It was stuck at 13 for the past couple of weeks. Palantir, 121.67. That's up about 3.7%. NVIDIA above 120. It was pushing 122 a little bit ago. Right now, 121.9. I mean, you got everything that's just making new momentum and new, realistically, 52-week highs for a lot of these names that were stuck in the gutter over the past couple of weeks. Grabs above $5. AMD's at 110, up 7%. SMCI's at 33.40. Reddit's at 113. Walmart's at 98.50. Uber's at 85. Uber was pushing 87 a while ago. The S&P again over the 200-day moving average at 581. The Qs, the NASDAQ above 500, 506.95. This thing went to 420 a month ago. I mean, this is just absolutely incredible in terms of the momentum that we're seeing. And it's because we got some actual solid details today. Some actual solid details that we're about to get into. So good morning, good morning, good morning. Thank you, everybody, for being here. We've got some details to get into. We got Bessent, who said a lot of things this morning. So we're going to take a listen to what he had to say about this Chinese trade deal. But we have some legitimate arguments for why the market is happy right now. And I think there's also some corresponding arguments for why the market will continue to gain some momentum as we get into some of the macro data that we're looking at here today. Now, we also have CPI. We also have CPI coming up, I believe, tomorrow, if I'm not wrong. So because we have CPI coming up tomorrow, well, if we get a good CPI, I think that whole idea of Powell not cutting based on tariffs being inflationary, given the data we got this morning around what the United States is doing with China, might be out the window if we get a really good CPI. So tomorrow, that's going to be really, really important as well to see if we can get a rate cut, which would seriously accelerate the level of momentum that we're seeing right now in the pre-market. So what did we get today? What was the big deal? Why are we mooning as much as we're mooning right now? Well, pretty simple. Here we go. For the next 90 days, as trade negotiations continue, the USA will lower tariffs from 145% to 30% on China. It's a big deal. Last week, I said 30 to 35%, I think would be the max. I know Trump was tweeting out 80% and stuff like that. But essentially, for the next 90 days, the United States has agreed we are going to lower from 145 to 30. 145 was never reasonable. 30 is a bit more reasonable. And China is going to lower their tariffs from 125 to 10%. 125 to 10%. That's it. That's all we needed. That's realistically all we needed. There's some more details that we'll talk about in a bit that in terms of the nitty-gritties of how this happens, fentanyl tariffs, etc. But this is the headline. As soon as this was released at 3 a.m. Eastern, I was sleeping, so I woke up to this. At Geneva, Scott Bessent had a press conference, and this is where he announced what was happening. There you go. That's what the world wanted to see. That's what we got. And here is Bessent talking about it a few hours ago.
To what was a very positive process. We have reached an agreement on a 90-day pause and substantially moved down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%. We had very robust discussions. Both sides showed a great respect to what was a very positive.
I mean, there you go. That's what you got. That's what you got. So Bessent saying, hey, Both sides showed a lot of respect. We had robust discussions. We trade representative Jameson Greer was saying that he was surprised at how quickly they were able to come to an agreement, probably because both sides knew that 125 and 145% was ridiculous. So it wasn't that hard to come to an agreement when you're starting from that high of a standpoint. But regardless, that's what the market wanted to hear. We've been through a lot of volatility in the month of April. We went all the way up at all-time highs in January when Trump got inaugurated, came back down to 2022 levels. And all of this theoretically was for this moment. Now, we don't have concrete details in terms of exactly what concessions we're getting. We do have some more details that I'll talk about in a second, but this is a framework to begin further negotiations. And that framework of negotiations should substantiate seemingly better concessions on both sides. I mean, was it worth going through everything we went through in April to get some of these concessions? No one knows. And we're not going to know until we get the actual trade deal in paper. But for the next 90 days, if we're lowering from 145 to 30 and 125 to 10, I think there's no chance in hell we're going to reaccelerate the tariffs from 30% to 50% after these 90 days. Just like the indefinite 90-day pause was never going to really be a 90-day pause. It was always going to be all right, we're never going to have these reciprocal tariffs on countries. We're just going to keep negotiating indefinitely in order to give us time to make sure those reciprocal tariffs get down to at least a baseline of 10%, if not lower. I think the exact same thing is happening with China, which is why the markets love it. It is why the markets love it. I put in the chat right here, do you trust this green? That's the big question for today. 79% of you so far are saying yes. 21% are saying no. Here's what Scott Bessent also had to say about progress around fentanyl negotiations.
This does not include any sector-specific tariffs that have been put across all of our trading partners. And as the ambassador said, I think he would agree with me that the upside surprise for me from this weekend was the level of Chinese engagement on the fentanyl crisis in the United States. They brought the Deputy Minister for Public Safety, who is not traditionally part of the trade team or the negotiating team, and he had a very robust and highly detailed discussion. This does not include any.
So, I mean, there you go. You got a lot of core things that the U.S. wanted and that China wanted. China wanting tariffs to be down, U.S. wanting specific things on fentanyl. It seems like there's a framework to begin those negotiations. Now, here's exactly kind of the details of what we have. So, in terms of tariff reductions, U.S. tariffs on Chinese imports cut from 145 to 30, China tariffs from 125 to 10. Okay, that's the big headline. Duration, 90 days, which in my opinion will last much longer than that. Reciprocal tariff levels. U.S. reciprocal tariffs on China will decline to 10%, excluding the 20% fentanyl-related tariff. That's how you get to 30%. So it's 10% in terms of all the different goods, and then 20% on fentanyl is 10 plus 20. That's how you get to 30. Effective U.S. tariff. After accounting for previous tariffs and exemptions, U.S. effective tariff on China will fall below 41%. Chinese concessions, no major concessions or purchase pledges from China yet. I imagine the United States is going to get China to buy a ton more of our goods. We just don't know what those goods are or how much they're going to be pledging for, but that is a detail that the market will be waiting for in the future. And then obviously on economic impact, April export growth is going to be strong. Tariff rollback may stabilize near-term exports demand and support GDP growth. You're going to have a lot more import demand coming in. All those small businesses that were going viral about how they weren't able to pay the 145% tariff. Well, now it's 30%. Still not the best thing in the world. Still probably annoying, but maybe not a tariff that's going to completely decimate a business. Maybe it's a tariff that's going to be just one of those things that business owners have to deal with in terms of paying, but it's not something that gets them to shut down the shop. And as a result, markets are having fun. Markets are having fun. HIMS, this thing looks like it wants to go back to 70. It's up 10% right now in the pre-markets. I mean, congrats to those that are in HIMS. It looks like the squeeze is happening. We had some pharma news yesterday that was relatively bearish for the pharmaceutical sector, with Trump essentially instituting price controls on prescription drugs in the United States. We'll go deeper into that news in a bit, but Pfizer, you can see down 2%. You would think HIMS would get affected by that in terms of their drugs or their platform being affected. And no, the market is saying, hey, HIMS already sells cheap generic drugs. It shouldn't necessarily hurt their margins. It should drive more demand to their platform. And when you have more demand, you have more personalization of medicine, which is kind of the moat of HIMS. And so that plus a 30% short squeeze has the stock hitting not all-time highs, but getting closer to those all-time highs, which is around 72. Right now, HIMS at 57, up 9.5%. So I think the broader question here, again, like I asked in the chat, do you trust this green? I think there are multiple perspectives to this. One argument to not trust this green is, hey, we don't actually have any deals yet. And the lack of substantial details on a deal outside of the 90-day pause could mean that we are setting up to get a rug pull. I think that's possible. And that could be a bear case. Another bear case could be that the actual economy is slowing down in and of itself, right? We got bad jobs data, bad consumer confidence data, bad consumer demand data, retail sales data, et cetera, even though there's a lot of conflicting pieces of data against that data. So like JOLTS was bad, but then non-farm payrolls was good. So it's hard to kind of say jobs data in its entirety was bad. So you can make that argument that the economy is slowing down and that's a reason to be bearish. I think there's like, those are the bear cases you can make, right? The economy is slowing down and that we don't have any substantial details on what the actual trade deal will be. The bull cases against that are like, wait a second, if the economy is slowing down, JPOW is going to be cutting rates, right? Like, so, and that's good for equities. So that's a counter to that bear case. If we, the bear case that we don't have details on China trade, it's like, well, that's an idiosyncratic bear case. We're going to get those details pretty soon. And both sides are pretty motivated from what it seems like to actually come to an agreement. So it's not like it's scary to imagine that this is going to go back into some massive trade war when both sides just had a very productive agreement in Geneva. So I think there are bear cases that are reasonable, but I also think there are massive bull cases attacking those bear cases that can at least substantiate why we're seeing the rally we're getting right now. And then I'm not saying we have to go back to all-time highs, but there is a argument that people say, you know what, now I am free to buy stocks. I don't have to be so afraid. Money market inflows. We got $7 trillion on the sidelines. I mean, there's a lot of different nuances to how money finds its way into the equity market. Shopify right here is up 11% right now. Why is Shopify live? Well, or why is Shopify up 11%? They are included in the NASDAQ 100. They are replacing MongoDB in the NASDAQ 100. And as a result of replacing MongoDB in the NASDAQ 100, they also had a good earnings. They missed on EPS by like 1%. But as a result, Shopify is getting some momentum right here. Trump is going to go live with RFK. I don't see him live yet. When he does go live, I will switch over to him. They will be talking about their new pharma announcement. He's not live yet. As soon as I see him live, I will switch. But he will be talking about his new executive order around pharmaceuticals. Now, here's one stat I want everyone to pay attention to because this is the big stat of the day, and this is actually my real reason for why I'm feeling pretty damn bullish right now, and I think we can continue to be in a exciting bull run. On April 3rd, Goldman Sachs data showed us that hedge funds sold the most amount of stocks in a single day since 2010. On that same day, retail inflows from JP Morgan data showed that they were 4.7 billion in a day, the greatest single day inflows from retail investors into the stock market over the past 10 years. Here's the sort of gamma squeeze bull case argument. And this is, maybe you want to hedge a little bit, sell some covered calls, take some profits. But if you want to kind of go long on the market for 2025, I think this would be one of the bull cases. If the hedges continued to stay on the sidelines for the majority of April, and if they didn't get in before this China preliminary deal that was reached this morning, they will not be able to stomach the rally we are seeing right now. And we already know that hedge funds took down their Mag 7 exposure to lowest since 2023. And we know that they have the highest short exposure since 2022. Both of those data sets we saw last week, which means I'm not saying every hedge fund is short, but the majority of institutional money is likely on the sidelines, or at least not as aggressively leveraged into the market. And if we're getting into a crazy bull market continuing from 2023, 2024, you just can't afford as a money manager that's taking 2% of your clients' assets to be on the sidelines. Either they're going to increase their short exposure and completely go against this rally, and if not, they will begrudgingly buy at higher prices and only continue to pump more capital into the current momentum that we're seeing right now, which means I think we can go a lot higher than where we currently are right now. And that is another bull case for the current equity markets. So yeah, FOMO rally. I mean, it could legitimately be as simple as a FOMO rally. Trump's still not live yet. I will switch to him when he's live, but it can literally be as simple as retail was not dumb money this time. And the smart money ended up kind of misreading the Trump negotiations. And again, they're managing a lot of money, so they have to be actively managing it. They have to be, very, very prudent with how they manage risk. But at the end of the day, if you completely left the markets, which, we saw data that hedge funds are just like, they went into gold. Gold went up 15%. By the way, where's gold right now? Gold is down 3% on the day. Why? Because everyone's realizing NVIDIA might be a better investment than gold. I mean, when you have gold going down the way that it's going right now, you're obviously seeing more money come back into the markets. And if they completely left, they just can't afford to be on the sidelines if 2025 ends up being the third year of one of the greatest tech revolutions that we're seeing of all time in regards to AI, and the corresponding byproduct of that tech revolution is a bull market. You just can't afford to be on the sidelines. The VIX right here, below freaking 20. I mean, Bessent did say the VIX had peaked back when it was 50, and that's when the S&P 500 was what, like 5,100? We're at 5,800. We are above the 200-day moving average. I mean, I cannot stress how big of a deal that is, that we are actually holding that level. It's in the pre-market right now. We're up 3%. I think it's going to be hard to give away all this 3%. But if we can meaningfully over the next month stay above this, I mean, there is a real shot for all-time highs. All-time highs are 6,200 on the S&P. That is not that crazy if we're able to have good earnings growth, more rate cuts, and then the potential for these trade deals to even further show concessions that are beneficial for the United States. So this can be exciting. This can be very exciting. Now, Bitcoin is moving. Bitcoin's not moving like crazy. It's at 103,927. I mean, Bitcoin's already moved aggressively over the past 2 weeks, so I don't think Bitcoin has to like go crazy. It did hit 105 last night. Speaking of Bitcoin, Michael Saylor, our boy, did buy some more Bitcoin right here. They bought another 13,000 Bitcoin and 99,856. MicroStrategy stock is up 40% year to date. It's outperforming every Mag 7. They now hold 568,000 Bitcoin at 69,287 Bitcoin in average per coin, which is pretty damn incredible for MSTR. Saylor continues to show his conviction on this asset. Okay, Trump just tweeted. The tweet was deleted as soon as he posted. I saw it for a second and then it got deleted. Maybe they made a typo and they're going to I saw for a second it said, for years Medicare drug prices have been high, and now it is gone. Pretty sure they're probably going to repost it. And we'll see what he has to say. It looks like Trump is going to go live with RFK pretty soon. Yeah, his last tweet was 2 hours ago. So I literally just saw it and then I refreshed and it got deleted. So they're probably going to repost it in a second. 2 hours ago, he did say drug prices to be cut by 59%, plus gasoline, energy, groceries, and all other costs down. No inflation. Love DJT. And he will probably be talking about all of that in his press conference when he goes live with RFK Jr. So there you go, folks. What are we thinking? What are we thinking? Are we excited? Are we scared? Are we feeling like this is too much too quick? Is it just recovering back to where we were? I mean, Robinhood was at 65 at all-time highs. Robinhood's still not even back there. So this could theoretically be just Robinhood getting back to where it was. Granted, if you believe February was hype, then Robinhood never deserved to be 65. If you believe February had some real momentum based on earnings growth, which at the time, based on the earnings we were getting, it was, for Q4, it was pretty damn strong. And, one could justify those prices. But then Robinhood fell 50% and went back to 30. Same thing with Palantir. Same thing with, like every stock took a real big beating after that February high. We are pretty much getting back to those levels. Tesla right here at 321. Tesla was down at 220. I mean, horrible earnings. Market doesn't care. Tesla maintained. Amazon was freaking 180 after earnings. It's at 209. 209. I mean, yeah, I would say Tom Lee was right. It was a V shape. It happened. It took a little bit of time before the V shape came through, right? It took, I think, about a month. Maybe, he expected it in 2 weeks. But we got the V shape. And the V shape is pretty damn exciting because, I mean, how many times do you see a 15% freaking monthly candle on the S&P? Like, that's insanity, dude. It's just insane. Look at this V. Like, we were at 62 all the way down to 48, 2022 levels, right back to 58. I know we're not all the way back yet, but still pretty damn incredible. In terms of some other stocks in the pre-market, so semis again are going crazy. AMD right here, 110.47, that's up 7.42%. You got Coinbase at 202, SMCI at 33.84. Crocs right here is up 8%. Elf is going crazy. These are names that have massive China exposure. They're getting momentum. I didn't look at Nike today. I'll bet Nike's up 4%. Nike's up 6.7%. There you go, 62.15. I mean, Uber is getting some love. You got a lot of these names. Lyft was up 30% on Friday. Lyft right here is up another 3.54%. Even Alibaba, China's up 6.7%. PayPal, 73. Just a lot of these names holding on to some of this momentum in the pre-markets. We'll see when the market opens how a lot of capital chooses to deploy or not deploy against these equities. But right now we are seeing some pretty good strength. Let me get to Bessent. He was on CNBC this morning as well. So let's just pull him up and see what he had to say. We are waiting for Trump to go live to make this announcement that he is going to be making on drug prices. And then we will keep going from here's Bessent this morning.
But I have seen what's going on in the Chinese economy. We can see what's going on with the shipments to the US. And again, we are the deficit country. Historically, the deficit country has a better negotiating position.
Mr. Secretary, part of China's plan over the last several years has been to manufacture far more goods than it can ever consume. It exports that not only to the United States, but to other countries around the world. Other countries like the United States and countries in Europe have felt like they're getting dumped on with all of these excess goods that are being manufactured. Will your talks in other countries find ways to make sure that China can't get around anything you set up in your deals with China by, let's say, shipping goods to Mexico and having that come up, those goods come up through Mexico? How do you shut that down? And did that come up this weekend?
Well, Becky, that's already happening. That's already happening with many goods. You know, it's happening with autos. It's happening with electronics. So that's part of the negotiation with the Mexican government. That's it's part of our overall strategy. And Chinese have an economic plan called dual circulation. And with dual circulation, our goal is to make sure dual circulation means export and domestic use. Dual circulation cannot mean that China overproduces and that only Chinese goods are consumed in China and then they export the excess to the rest of the world. So we have had the equivalent, because of these high tariff rates, of an embargo on China, and those goods are going to leak to the rest of the world. So, you know, our negotiations, we don't need to tell other countries what they need to do. They are seeing this wave of Chinese goods coming to their shore. They have to find a home, and that could be at a discount price, undercutting local producers.
Mr. Secretary, I have a question for you, which is the market's obviously very happy about this morning. I think the global economy is quite happy about what you've been able to accomplish over the weekend. The question I would ask is how what you've accomplished over the weekend squares to some extent with some of the things that we've heard over the past couple of months from the administration about what the tariffs ultimately could do to both box out China, put pressure on them to do other things for us, to create meaningful additional revenues in the form of tariffs, and perhaps most importantly, to force manufacturing back to the United States. And so by lowering these tariff rates, to some degree, I'm sure there are critics who would say that it upends some of those goals.
Well, again, Andrew, this is just a pause. The April 2nd tariff level for China was 34%. So we have moved that down from 34 to 10. We still have the 20% fentanyl tariffs that were put on in February. So we just in 2025, we have added 30%. And again, one of the most important things that we're doing, we do not want a generalized decoupling from China, but what we do want is a decoupling for strategic necessities, which we were unable to obtain during COVID, and we were.
This is exactly what the market wants to hear. They don't want a general decoupling from China because we need their cost of goods, right? Their labor costs. But for strategic purposes, aka chips or pharmaceuticals, we do want a bit of a decoupling, right? From a national security perspective. This is what the market basically thought was going to happen on April 2nd. We would have some targeted tariffs, not like these blanket universal tariffs, and the market got whipsawed. So with Bessent saying, hey, we don't want to leave China. We just want to like make sure we get a good deal in certain areas, but the rest of this stuff, aka the t-shirts and iPhones and stuff, probably we can, keep as they were. That's music to the market's ears, because that means that Apple, Amazon, all these companies get to live with not having as aggressive as tariffs as they've had before for the past month.
Realize that efficient supply chains were not resilient supply chains. So we are going to create our own steel, protect our steel industry. They work on critical medicines, on semiconductors. So we are doing that, and the reciprocal tariffs have nothing to do with the specific industry tariffs.
We heard, Mr. Secretary, that some progress was made on fentanyl and that deal, and that's 20% of the tariff that's going to stay. What progress was made, and how do you see that happening over the next 90 days? And do you expect a deal can be reached? And what does it look like? What do you want China to do exactly with fentanyl?
Well, Joe, this is a priority for President Trump and indeed the whole administration. I have a personal stake in this. The two very close friends lost children to this terrible scourge. Hundreds of thousands of Americans die every year. And I think that we saw here in Geneva that the Chinese are now serious about assisting the U.S. in stopping the flow of precursor drugs, because the Chinese brought their trade delegation, led by the vice premier, but they also brought a deputy minister for security who was their fentanyl expert. We brought someone from our national security staff, and they had a very long and in-depth sidebar about how our two countries could work together.
As far as some of the non.
All right, so that's what we got from Mr. Scotty B. Trump is not live yet, and now he's scheduled to be live at 9:30. So I doubt he's actually going to be live at 9:30, probably 9:45, maybe 10 a.m. So we will switch to him when he is officially live to announce what he's announcing with the pharmaceuticals, but currently not live right now. Lee, thank you for becoming a channel member. Appreciate it. Rob, thanks for the super chat. Admit, is Trump winning the tariff war? I would say the United States, from a perceptual standpoint, based on the UK deal and based on the at least lowering of tariffs in China and getting China to lower their tariffs on us as well, is in a good position. Winning, I think, is subjective, but realistically, I think we would agree that the United States has won the trade war when we get major concessions from a country like China or India or Japan, et cetera, right? We got some concessions from the UK, but we already had a surplus with them. If we can get China to say, hey, we're going to buy $500 billion worth of more goods, yeah, we won, right? And now it depends what we gave up to be able to get that concession, but we don't have those details yet. The reason the markets are winning right now is because the markets simply did not like the uncertainty of what was going on over the past 2 months. And we have more certainty. And it looks like it's pretty damn obvious that we're going to continue to get even more certainty. Even China's vice premier last night quite literally said, our goal is to now inject certainty into the markets in order to stabilize trade relations. This is what he said last night. We are going to inject more certainty and stability into the world economy. China is ready to work with the U.S. to manage differences, extend the list of cooperation, and make the pie of cooperation bigger. So the reason why markets live in the future is because markets continue to go forward and they price in what's going to happen years from now. And what it looks like, at least weeks or months from now, is that the level of tariffs that we imposed at 145% at one point are not going to exist. And the reciprocal tariffs that were 30, 40, 50% against all these countries are also not going to exist. They might not even be at a baseline of 10% if we really get some good concessions from the rest of the world. Now, that begs the question, wait a second, Trump said he was going to pay for these tax cuts and he was going to pay for the deficit using tariff revenue. If we're not really going to impose aggressive tariffs across the entire world, how are we going to pay for this stuff? So there's a lot of questions that are up in the air, which is why you see bond yields ripping right now, which let's transition to bond yields and talk about them. But at least for equities, we needed certainty. And we got some certainty, which is a good thing. Now, bond yields, what the hell is going on? 4.465%. Okay, so we were freaking out about bond yields early April, or I would say mid-April. And the reason we were freaking out about them is because the S&P 500 was basically at 52-week lows and bond yields were at 52-week highs. That's not a good thing because, again, people should be buying bonds as a flight to safety when stocks are going down because the equity risk premium on stocks is so high that you don't want to pay that premium because you're taking on too much risk. So you'd rather get 4.5% guaranteed over the next 10 years by the country that theoretically will never default on its debt, which is the United States. Why are yields going up? Yields are going up. They were at like 4.1%, I think, 2 weeks ago. Now they're at 4.4%. So it's a pretty significant move. They're going up because people are selling bonds, which causes yields to go higher. They go inversely to stocks, and they're buying stocks. Why are they buying stocks? Because now you're like, screw it. I don't want NVIDIA. or I don't want gold. I want NVIDIA. I don't want 4% from a 10-year when NVIDIA's up 4% in the pre-markets, right? It's one of those things where it's like, if the risk is not as high because the China tariff uncertainty is not as aggressive, then you're going to get out of things that are safe, like a gold, like a 10-year, and you are going to go into equities. Now, you may be wondering, well, wait a second, this is not a good thing because the 10-year goes up, mortgage rates go up, auto loans go up, rates on pretty much everything. The cost of capital in general goes up, given where we have interest rates from a federal level right now, like continue to just add to the momentum of things becoming more unaffordable. And the cost of our debt, aka refinancing our debt, which we have about 9.5 trillion that we have to refinance, that also continues to go higher. Well, the solution here is very simple. J-Pow's got to cut rates. It's like the ball is now in J-Pow's court. And why am I saying the ball is in J-Pow's court? Well, what has been the biggest reason why J-Pow hasn't been cutting rates? There's two things. Number one, it's been, well, he's afraid of the tariff volatility creating more inflation. He said this over and over again. His argument is that there's so much uncertainty. Tariffs are going to create more inflation. He doesn't want to cut into inflation, stimulate the economy if tariffs are going to increase the prices on everything. And number two, he thinks the labor market is relatively stable. He has one argument, which is that the labor market is relatively stable. I mean, like you can't kind of argue with that. There is some conflicting data back and forth around JOLTS versus non-farm payrolls, but you can make the argument that labor markets are not horrific right now. It's not like we're losing hundreds of thousands of jobs. We are adding still about 170,000 jobs a month. The other part of his argument, which I think is more significant than the labor market, because remember, the Fed does have a dual mandate. They have to look at maximum employment and inflation, is that if Trump is lowering the tariffs from 145% to 30%, which is still aggressive and will still probably lead to an increase in prices. There was a headline today by Apple from Bloomberg saying that Apple is going to be increasing their iPhone prices, but they're not going to be blaming tariffs, and they're going to explicitly try to communicate to consumers why they're raising their prices and not, politically do what Amazon did a couple weeks ago, which got them in trouble with the administration. Obviously, it's probably because of tariffs, but they're going to try to communicate however they communicate for why iPhone prices go up. We will still have prices go up, but they will not go up as dramatically as I think J-Powell thought they were going to go up. And as a result of that, I think the ball is now in J-Powell's court. If the economy is good, people have jobs, and the stock market's pumping, people are not going to blame Trump anymore for a recession or a slowdown in the economy. They're going to blame the guy who has all the power in the world to bring down rates. Now, if you look at the June probabilities for the Fed futures, there is an 8.1% chance, basically a 0% chance that J-Powell is going to cut in June. This number was 65% 2 weeks ago. Now it's 8%. So you might be wondering, well, okay, if all the power is in J-Powell's hands, why are the Fed markets of Fed future probabilities so low? Well, tomorrow we might see this number gap up. CPI. If we get a CPI that is meaningfully lower than the previous CPI, which was at 2.4, if we get a CPI that's at 2.1 or 2.2, the golden number for the Fed is 2%. I mean, if this number comes in at 0.1 or 0.2% away from 2%, which is their target, I think everyone will be blaming the Fed if they don't cut, because you cannot have a federal funds rate that is basically double 85 to 90% the headline inflation rate. And if you're trying to convince the American public that, oh, don't worry, inflation is going to go up because we know these tariffs are going to be so bad, and then that doesn't happen because Trump ends up finding a lot of negotiations and trade deals and takes all these rates back down, or specifically the tariff rates back down, and we don't have this dramatic increase in inflation, and the reason for the slowdown in the economy is because of higher rates, then people are going to be really upset. And the Fed's probably going to be chasing with 50 to 100 basis points by the end of the year if they don't give us at least 25 going into June. Meta right here, 628. That's up about 6% right now in the pre-markets. NVIDIA up 5%, 121.93. Google as well, up about 3%, 157.25. So one of the other reasons I think staying in the markets right now makes sense is because, wait a second, if J-Powell's going to cut, if he's going to be forced to cut, if we get a good CPI tomorrow, and why would we get a good CPI tomorrow? Oil went below 60 in April. Shelter, we have had Kris come on many times showing all the inventory data around how shelter is starting to become deflationary. We look at rents as well, especially in the southern part of the country. I mean, there's a lot of arguments for why we should get some decline tomorrow. Maybe it's not a meaningful decline, but maybe 2.4 to 2.3. If it's not 2.4 to 2.1, maybe it stays solid at 2.4, which even then you're going to be wondering, why is the federal funds rate 4.5 if we have 2.4% inflation? And so from that perspective, you can get a lot of people to get really excited, and we could get these rate cuts sooner than expected, but it really does depend on the CPI number. Here's Mike Wilson this morning, who is saying pretty much the same thing, that J-Powell might be under pressure to start cutting pretty soon.
Why do you think the Fed is still in play, that they may actually cut rates?
Well, if let's say the tariff negotiations that went on this weekend become permanent, and we only have a 10% basically reciprocal tariff on the rest of the world, that probably isn't nearly as limiting for the Fed from an inflation standpoint.
But if the economy's doing well, corporate earnings are doing well, why would they step in?
Well, I would argue the economy is still soft. Okay, so I don't anticipate our forecast for the economy going above trend line growth anytime soon.
Okay.
So the Fed is in a restrictive zone.
Why not?
That's clear.
Because we've done some damage to it. You talked about deregulation and tax certainty. That should be bullish.
Well, in the near term, right? So we're still working off all the COVID, imbalances that we've had, and as we've pointed out, I mean, a lot of the private economy is in somewhat of a recession. Most of the interest rate sensitive parts of the economy have been very, very soft. The Fed knows this. So why shouldn't we have lower rates to stimulate the interest rate?
No inflation. Bring it on. I know. Put the pedal to the metal.
And also, if you're going to really move from a publicly driven economy to a privately driven economy, something the Treasury Secretary has talked about at length, why not deregulate the financial system, cut interest rates, and really get the animal spirits going? Everything that people were excited about 6 months ago.
Why don't you go to 6,000 to 6,500 then for your new rate?
Well, we are for the second half. Okay, so the second half.
So that's your thing, 6,000 to 6,500.
For the second half. The first half is we're still probably capped below the highs until we get through second quarter earnings.
Yeah, like 15 days or 45 days left.
That's right. So like we're definitely more bullish than our peers. We didn't throw in the towel, in this movement because I think we were prepared for this. We were positioned defensively. And now the only question is, do you really want to go to the kind of pure cyclical parts of the market? The areas that have been beaten up the most on your previous.
So Morgan Stanley, Mike Wilson, still has a $6,500 target. And their market call was a little complicated, but they basically said we would get to 5,600 by the first half of the year because there would be a lot more strength versus weakness. And then towards the latter half of the year, there's going to be more weakness versus strength. That flipped based on all the tariff stuff. So now they think there's going to be a lot more strength at the latter half of the year versus weakness, which is why they're saying 6,500 is still in play. I would imagine Evercore, Goldman Sachs, Bank of America, JP Morgan, all of these guys are going to come out over the next week, especially if we are able to hold above the 200-day moving average, which is quite frankly above all of their revised S&P 500 targets. Most of them are below 56 to 5,200 is kind of where most of them lower their targets, up from 62 to 63. We're at 580 on the S&P. I mean, you just can't have an S&P target that's at 5,200 if the S&P is pushing 6,000. So we are going to see increases in these targets across the board if we can hold this momentum. And the question is going to be in 5 minutes when we open, do people chase this rally? That is the question. That is the question. I mean, let's ask that right here in the chat. And I think there's a shot people chase this versus sell this simply because a lot of the worst of the news, which again, the market moves on expectations, is kind of gone, right? Obviously, anything can happen. We could have a black swan event, like, maybe China says, hey, we don't like the United States anymore. We want to rip up all the negotiations. But barring any of that happening, if you're looking forward, what is that forward bear case that is so obvious, or maybe that is so not obvious that people want to sell into versus embrace in terms of a bull rally? So do people sell or chase this rally? What do you guys think? And if you are selling this rally, I mean, let me know in the chat. I would love to see some contrarian arguments and reasons for why people want to take profits here. But I think a lot of people aren't going to be chasing. I don't think any of us here have to chase because from my understanding, most of us bought this damn dip. Even if we were annoyed at buying the dip, I think pretty much 90% of us here bought the dip. Because what else do you do as retail, right? What else do you do? You have to trust that you believe Robinhood, SoFi, Tesla, Palantir, NVIDIA, these are just going to be bigger companies in 5 years than they are today. And, the other thing that is really important throughout the month of April that was going on is that I think we all kept focusing on the fact that this is still an AI-based tech revolution. Like ChatGPT was crossing damn near 1 billion users in the middle of April, but the market was down. Sam Altman was tweeting every day about how they need more NVIDIA GPUs, but NVIDIA was trading at 105. Like, it's one of those things where if you were just like observing anecdotally the world, you were like, wait a second, humanoid robots are coming, FSD is becoming amazing. Yesterday I wanted to go to a park in New Jersey. I wanted to go to a new park. I literally went in my Tesla. I typed in parks on the dashboard. I found some park that was 5 miles away. I clicked FSD and I just sat back and I let it take me to a new park. I didn't have to worry about making turns or finding the right highway to get on. It just took me to a park. I mean, I don't know in my lifetime if I'm going to be able to see flying cars, but I'm pretty damn grateful to be able to experience what I get to experience every day with FSD. And that's a real life version of AI happening in my face every single day. It's hard to be so bearish on the broader economy, especially when it's fueled by margin enhancements via AI. When you're experiencing it every day, all of us experience Grok and ChatGPT every day. So I think from that perspective, that was a generic retail version or a retail argument to stay bullish because we're experiencing such a technological shift in front of us, even if the market was discounting all of that technological shift due to tariff volatility. Well, if the tariff volatility is down, then the market can get a bit more excited, which is pretty damn incredible. Travis, thank you for the $2 super chat. What time will Trump go live today? It says 9:30, more likely 9:45. So I will switch to him as soon as he's live, but probably will be in the next 20 to 30 minutes. Marianne, thank you for the $10 super chat. Admit you explained the market, the players, the motive so well. Thank you. Thank you for being here, Marianne. Appreciate you joining the show. And thank everyone. Thank you to everyone for being here and spending your morning with me, or your night or your afternoon if you're across the world. Magusto, thank you for the $10 super chat. I asked Gemini if super chats are tax deductible. It answered no, but F it, I'm still giving you to the best YouTuber. Thanks, bro. Magusto, thank you for being here. I think Google takes like 30% of the super chat, so you are supporting Google stock as well for all of us Google shareholders. So appreciate you and thank you for being here. Thank you for being part of the show. TLT is getting destroyed right now. TLT has not been the play, and the reason TLT has not been the play is because yields are rising. I think TLT will still have a shot to do well by the end of the year, but it depends on if JPOW is going to cut. And so TLT is one of those things where if you think yields are topping right now at 4.5% and you believe JPOW is going to cut at least by 50 to 75 bips, which if the tariff volatility is going down, you would assume that's inevitable, because if he doesn't, then it's really going to start looking political. I mean, if we have a low CPI and we have tariff volatility come down and JPOW still doesn't cut, you're going to see a lot of blame heading towards Powell. So, I mean, look, TLT, not the best move all year, but it could turn into a good move if we actually get rate cuts. The question is just going to be, do we get those rate cuts? But outside of TLT, I mean, it's hard. TLT and pharma are red today, and the VIX, everything else. I mean, literally everything else is green. If you own anything other than the VIX, TLT, and pharmaceuticals, you should be doing well today. And this is why we invest, right? It's for these days. It's for these moments. You go through the gut-wrenching volatility, the volatility that wipes out your retirement account by 30%, just to be in these moments where you can then be up a lot more than 30% a month later if you trust the allocation of your capital and you trust that you're invested in some pretty good companies. And in about 20 seconds, we're going to see if the market agrees with the momentum we have currently right now in the pre-markets. Here we go, folks. Monday, May 12th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Let's get into it. Robinhood, 59.04, up 8% on the day. Tessie, 318, that's up 6.7%. SoFi, 1403, that's up 6.4% on the day. I'm sorry if the audio was drowned out and it turned into a Temu bell. It's freaking StreamYard, dude. It's getting ridiculous. But I promise I did ring the bell for much longer because we got a green day. Amazon, 210. Amazon was freaking 180. After earnings, after they missed AWS expectations by 0.6%, the market took it down 10%. Amazon right here, 209, up 8% right now in the pre-markets or as the market opens. Palantir, 119, that's up 1.58%. NVIDIA is at 122. Wow, 4.7%. 4.7% on NVIDIA. Shopify is being included into the NASDAQ 100. That's why that's up 13%. It was at 87 last week, was down about 5% after missing EPS by 1%. Probably was worth a dip buy. I looked at it. I didn't pull the trigger, but if you did, Shopify right here, 103, that's up 12% currently right now. Google, 157, that's up 3%. Microsoft, new highs for the year, 445, that's up 1.4%. MicroStrategy, 415, that's actually down a little bit. Sailor did buy about 13,000 Bitcoin this morning. Grab, just below $5. grab at 498. Nebius, they had some big news on Friday with a company called ClickHouse. They got upgraded by, I think, JP Morgan to $35 today. This stock is up 15.7%. I'm going to have someone come on the market close either today or tomorrow to discuss more about what's going on with this company. They're in the semiconductor space. Nebis right here, 15.5%. Bitcoin at 104. Dell's at 103. Verizon's at 42.73. Archer is up 4%. GameStop, 27.71. Square, 54.08. This one was below 50 after their earnings last week. Alibaba, 133. That's up 7% currently right now. That is green. The Qs up 3.4%. The Qs are up 3.4%. Lululemon, this was another name that has some China exposure. Look at that, 9% on the day. Absolutely incredible for Lululemon. The VIX right here down 10.9%. That's below 20, which is nice. Walmart, 97.77. That's green. Lyft, 16. Lyft is actually red. Okay, Lyft was up 30% on Friday. Probably makes sense that Lyft should be a little red after that, or people are selling into this pump. Hoodie, 58.49. That's up 7%. It was up 59. So we're seeing a bit of red candles get deployed across the board. Tesla right here, 314. That's also down. There's that red candle from 320. Again, some of these stocks, you know, we talked about this last night on the Future Show. Some of these stocks have pretty aggressive valuations, like a Palantir, like a Tesla. So I wouldn't be surprised to see them sell off a bit or not really get to brand new 52-week highs or all-time highs because, you know, they're still trading at a pretty aggressive range. But for them to even keep the level that they're trading at, Palantir in the triple digits, Tesla even above 300, I think is a win for most shareholders that ended up buying the dip on those stocks. Google right here at 158.20. Let's look at the semis. Semis are relatively green on the day. So we got Dell, that's up about 7.9%. Micron's up 8.9. AMD 109, that's up 6. Nvidia, not bad, baby, 4.72%. TSM's at 186. Qualcomm's at 153. ON is at 9.3%. Wow, Marvell's up 8%. ARM, which was down 8% last week, that's up 7%. And then Broadcom right here, 4.5%. In terms of the Mag 7, Meta, 624. That's up 5.4%. Google, 157. Nvidia, 122. Tesla, 314. Amazon, 209. And then Apple, 209. Apple was at 189, or Apple was at 194 last week. It was 189 a few weeks ago, 194 last week. So Apple recovering after their earnings at 208.79 currently right now. Now, outside of the Mag 7, we also have the pharma names, which are going to be affected by Trump's announcement that he'll be giving pretty soon. Pharma, let's take a look at them. A little bit of recovery, but still relatively actually no, green. I mean, I thought they were going to be red, but they're green. Wow, look at all these names. J&J's red a little bit. Hims is up big, 7%. Moderna's up 6%. Didn't expect that. Merck right here is up 4%. AbbVie's up 0.73. UNH is up about 0.10. Bristol Myers Squibb up 2%. Pfizer's up 2.2. CVS is down. Novartis is down. And Abbott's down. Eli Lilly was down 4% in the pre-markets. Now that's up 1%. I mean, it looks like the market is more excited about the China deal versus the impact on the pharmaceutical sector based on Trump's executive order. So that right here, not really going the way people thought it would go. Tesla right here, 315. There you go. That's your red candle right there on Tesla. So we still are down on, I mean, we're still up on the day, 5.7%, but Tesla is getting that red candle from 321. And then you got Palantir that goes red, 117.21. Okay, so Palantir is not surprising to me. As much as I would love Palantir to make all-time highs, it's trading at an aggressive multiple, and all of us know that, right? So Palantir kind of being sold into the strength. Again, for me, the big thing is, can Palantir normalize triple digits over the coming month or over the coming months? Because that would be really important to say, hey, maybe this really is something people are buying the dip on at $100 and above. But as of now, 116.54, that's down about 0.61%, kind of going the opposite with the market. SoFi as well, giving up some of its momentum, 14 to 13.80. Again, Tesla, 320 to 315. Hoodie from 59 to 58.20, still up about 6.5% of the day. And then Nvidia, 122.40 to 121.75. Still green, but still getting a little bit of red. The cruise lines, are these green? Cruise lines are green. Wow, Carnival up 8.9%. Royal Caribbean up 6.14%. There you go. Is Trump live? I don't see him live on my screen yet. Let me see if he's live on a different stream. And then we will switch over to his big announcement around pharmaceuticals, which essentially is a price control on drug prices, which is the best way that I understand what he said yesterday. Yeah, Trump's not live yet. He is not live yet. Probably will be live in like 10, 15 minutes, but not live yet. Micron right here, that's up 9.2%. Micron getting some love. Let me check if he tweeted. He did not tweet yet either. Okay, so we'll probably be waiting just a little bit. ELF is getting some love because, again, ELF exposure to China, 13.7%. Nike should be getting some love as well. Nike, there you go, up 8.9. Bill Ackman should be happy about that. And then obviously you got Alibaba at 6% and Lululemon also with some China exposure. That's up 10.6%. Getting a lot of love. A lot of love. Tesla does have a $1 trillion market cap again. So there you go on Tessie, 315. I mean, look, the earnings weren't good, but you got Robotaxi coming up in June. Right now, the market doesn't care. The market does not care. They are looking past the automotive revenues and they are looking towards the future. And if Tesla can pull off the Robotaxi, at least beginnings of June and show off a decent Austin launch, then maybe that's what the market price is in. Along with the call option on humanoids, which we don't have a lot of progress on yet, but that is something that could whipsaw the market to the upside if Elon announces anything special there. Palantir right here, 117.76. Pinterest, great earnings last week. Wow, 14% on the day. My goodness. And then you got Google, which went to 149 last week after all that Apple news around them replacing Google as the default search engine on their browser. That right there is also seeing some love. I still think this is a market where covered calls can work. Realistically, like, yes, do I think we're going to go higher? Of course, especially by the end of the year as earnings improve and we get more calmness around trade volatility and get more trade deals. But I mean, for it to be like a 2024 rocket ship, I think you would need a damn near perfect environment. And we're not there yet. And remember, one of the things we had in 2024 was the government spending. And the government's not spending as much as they're spending before. So like there are still things that I think can cap the upside in the short term, which is really good for the volatility around covered calls to be able to print. So if your covered calls are underwater today, I mean, you could probably roll up and out to a little bit of a higher strike, but I don't think you necessarily have to be super scared about losing some of these shares, which, look, everyone has their own risk tolerance. But if you had a covered call on Tesla at 270 and now it's at 313, yeah, that's an issue. If you have a covered call at 305 and Tesla's at 315, I mean, I don't think that's the scariest situation in the world. Hims right here. Again, a lot of people thought that pharmaceutical EO would hurt Hims. It's up another 8.2%. It's up another 8.2%. Amit, what if institutional money starts to flow back into the market? That's the big question. That is the multi-trillion-dollar question, quite frankly. If it does, then yeah, I think covered calls can be under pressure. The question is, how aggressively will that money come back into the market? And realistically, I think the hedgies are going to want to manipulate. They're going to want to, algorithmically trade. They're going to want to dupe people out of their stocks and try to put out bad headlines to get people upset and then buy in. I don't think it's going to be all at once. They're just, greedily just going to chase everything at all-time highs. I think it's going to take them a little bit of time, but eventually I do think that money's going to come back in, especially if we get more progress on these trade deals. So my point is, if it comes all back in at once, then yeah, we could get a 2024 type of market. But if we don't, which realistically I don't think it's going to happen, in the next few weeks, it's going to take over the next few months, then covered calls might not be in the worst situation. Spotify and Netflix, let's take a look at these guys. These guys were the recession-proof stocks. Wow, why is Spotify down 7%? And then Netflix is also down 2.3%. Okay, so those two are being traded together right now. That's a bit weird. Why wouldn't covered calls work? Just keep rolling. You can keep rolling covered calls, but it gets to a point, right? Like if you have your covered call at Tesla at 275 and then Tesla goes to 400, right? Like your rolling eventually will get to the point where you're either losing money, you're not getting any premium, you're paying a debit to roll, or you have to roll so far out. I've been in this situation where you roll out 2 years to some big strike, but now that capital is stuck for the next 2 years, right? So nothing wrong with that strategy. It's just one of those things where you might have to not easily get out of the situation. And you might have to manage it for a longer period of time if the stock really does get away from you. Spotify and Netflix, interesting. So market's giving momentum to it's kind of like Spotify and Netflix were the recession tech plays, and the market's saying we're going back into the non-recessionary tech plays, which is like a Hood, a Tesla, an Nvidia, and we're going to sell off what we thought was going to do well in a recession, like a Netflix, which wasn't going to theoretically lose subscribers during a recession, because that's a pretty aggressive move on two tech companies. Spotify and Netflix are tech companies going down 3% and 6%. Spotify here now 6.4%, versus like an Nvidia going up 5% right here. Yeah, Spotify now down 7%. Wow. Interesting. All right, so the market kind of rotating from there. Hims again up 10.5. This thing looks like it wants to go back to 70. It looks like she wants to go back to 70. Meta at 624. Steve was on the show yesterday. he had an interesting stat. Walmart is trading at 29 times 2027 forward earnings. Meta is trading at 18 times. And we don't even want to get into the balance sheets of Meta or Walmart or the buybacks. It's pretty damn incredible the discount that big tech is trading at compared to some of these blue chip names like a Walmart or a Costco. But still, one could argue that big tech is discounted right here. And you're seeing it up 5%. Meta was below 500 at one point in the year. But Meta right here now back above 600. At one point, it was 740 in January. Amazon right here, 206. So that one's getting a red candle as well. That went from 210 to 206. And then Hoodie, 57.58 currently right now. SoundHound, another risk on move, is up 13%. They had a pretty decent earnings. And then QBTS D-Wave is up another 2.7%. So you got some of the spec names as well, continuing to get some momentum right here. NVIDIA, 120.87 down from about 122. That's still up 3.6%. Bart, thank you for the 240 euros. Appreciate that, brother. That is very kind. You did not need to send that, but I appreciate it very much. Just sold 4,000 shares of NVIDIA. Quite a nice return. Thanks, Amit. Bart from Belgium. Bart, first of all, I appreciate the super chat. That's very, very kind of you. So thank you for the super chat. And also congrats on the 4,000 shares of NVIDIA. If you wouldn't mind disclosing to us, what'd you pay for them? What'd you pay for these NVIDIA shares? Did you buy them a year ago? Did you buy them recently on the dip? Did you buy them at 105, selling at 120? I imagine 4,000 shares is going to be netting you a pretty nice profit. So congrats to you. And yeah, thank you for being here. Thank you for the super chat as well. 4,000 shares of NVIDIA, not bad. Well, now we know why NVIDIA is down from 122. We had Bart all the way from Belgium selling 4,000 shares. But nonetheless, congrats, brother. Congrats. And I mean, dude, if you got to take some profits here, take some damn profits. Take some damn profits. You don't have to chase this. You don't have to just hold on to your stocks. If people want to take profits, market's giving you a hell of an opportunity to take some chips off the table, which is not the worst thing in the world. Also, yeah, why'd you sell? Why'd you sell? Did you feel it's getting a little toppy? Did you just want to lock in some gains? But we'd love to know why you took some profits right here. Robin at 57.54, that's up 5.3%. And then Palantir, 118.15. Up about 0.17%. That's slightly green. No capital gains in Belgium. Well, that's another hell of a reason why he probably sold. Dude, Belgium, Singapore. I mean, it's just incredible, dude. I was calculating my cap gains for next year. It's not looking pretty, dude. It's not, let's just say it's not looking pretty. Like this year was the most I've ever paid in taxes. Next year is going to be at least double. It's just, it's just, I love America, and of course I want to contribute to America. I am a product of public school, right? So I get taxes are important, but man, does it freaking suck when you have to pay taxes on capital gains in particular, because you take so much risk buying equities and you get rewarded for that risk, but then, 30 to 40% of that reward is gone. So regardless, it's what we got to live with in the States. Robin right here, 57.58 up 5.3%. Palantir 118. Trump is not live yet. Still waiting for Trump to go live. He is not there yet. But we will get him pretty soon. And we'll see what announcement that he has to make. Wow, Hims 58. My goodness, this thing is running 11%. I think she's going to squeeze the 70. I mean, the short float increased from April 30th. We saw on Friday, we looked at the new data. It was at freaking 34%. The shorts doubled down on Hims, which is pretty insane. Pretty insane. By the way, do you guys remember this chart? That we shared in early March? And the caption on the post, it's not my chart, it's Grant Hawkins. He's a great guy on Twitter that makes these charts. My caption was, could it be this simple? Could it be this simple? Kind of looks this simple, dude. This is the S&P 500 election cycle aggregated for the past 50 years versus 2025. So this is from 1950 to 2021 in blue on what happens in the market on the first year after an election cycle. And then in red is 2025. So far, you had that top off in February, went all the way down in March, recovered in March, went back down in April. In this case, we just went lower than what the blue line shows in April. And now in May and June, it looks like we're going to go higher. We'll go back down in June. We'll make new highs in July, August. We'll come back down for September, October. And then we will Santa Claus rally into November, December if it is going to be this simple. So I mean, maybe this is how it ends up playing out. Again, this is an aggregated data chart on the S&P 500 on all election years from 1950 to 2021 versus the current election year, post-election year, 2025. Maybe that's what ends up happening. Hims right here, 58 going for 59, up about 12%. But if it does play out like that, it would be pretty damn incredible. Robinhood 57.33, Amazon 206, Meta 624. Some of the crypto miners, Marathon is up 2%, Coinbase up 4.8, BitX is currently up right now as well. Robinhood 57.25, Bitcoin 103.92, and then MicroStrategy 414 currently right now. CleanSpark as well. That stock is up about 5% in the pre-markets. We all saw this with the trade war in 2018. Those with a good memory made lots of money in the last 48 days. Yeah, the trade war in 2018, and the other similarity with the trade war in 2018 is we had rate hikes in 2018, and then we got cuts in 2019. Hopefully we get cuts not in 2026, but in 2025. But if we end up getting 3 cuts, we had 3 cuts in 2019, it'll be almost exactly like the trade war of 2018. And in this case, it would have been a juicy dip to buy in 2018, and it seems like a relatively juicy dip in 2025. S&P 500 falling from 580 to 578. I'm not complaining about that, but we are still above the 200-day moving average, up 2.5%, even though we are not in that 580 range anymore. Beepster, thank you for the 20 pounds to pay the AK Media tax bill. I appreciate it, brother. That 20 pounds will definitely be going to paying off some of this tax bill in 2026. Thank you, brother. Thank you for being here. And then Some Devil, thank you for the $5 super chat. Thanks for paying off my mortgage pound here. Well, that's what the job of the equity markets is to do, right? It's to take what you make and actually end up paying off real life bills. So if Palantir's paying off your mortgage, congrats. There was a guy who went viral on Twitter like a week ago, right before Palantir earnings, who sold like his last 500 shares, and he said he paid off his mortgage as well. So I mean, look, this is the beauty of the markets. You could allocate capital 2 years ago, not do anything, literally just sit back, let other people execute on your behalf. I mean, think about how crazy that. You can invest in a Robinhood. You can invest in a Tesla, invest in NVIDIA. You don't have to do a single thing. Let Jensen, Elon, Vlad, Karp, let them just figure it out. And you just sit back and watch numbers go up if they figure it out correctly and if the macro environment stays stable. But I mean, it's just incredible. It's one of those things when you realize this is possible and this is the beauty of the equity markets, you wonder why is not everyone in the world at least somewhat allocated to equities? And, a lot of it goes down to people's risk tolerance, but still it is quite incredible to see this play out, and then you can pay off your mortgage from that. It just makes it more incredible. So you got markets right here. Continuing to get some momentum. Amit, will you buy more NVIDIA? I was at Texas Roadhouse on Friday. I went by myself. I felt like having a steak. There was a 45-minute wait time, dude. Texas Roadhouse, insane. And while I was at Texas Roadhouse, I was eating my steak. By the way, I got my steak medium instead of medium well, so there was pretty aggressive pink in it, but I still enjoyed it. It was good. It wasn't horrible. I've been bringing this up because I was sitting on my phone and I bought 200 shares of NVIDIA at 116.41. I bought some more NVIDIA. I kind of was, I was just thinking about it and I was just like, you know what? Why not? I was like, at this point, I think, it was going into China, right? It was going into the Switzerland shit in China. So I was like, all right, if we're going into the Switzerland shit with China and any good news happens, it was a little bit of a gamble because what if we got some bad news? But while I was sitting at Texas Roadhouse, just bought 200 shares at 116. So I did buy some more NVIDIA. No covered calls on it. Let's see how this one runs. I do think going into earnings, it's not going to be the gap up that people are thinking. I think it's going to take some time, but eventually I do think we get back to all-time highs. Oh, Trump is live. All right, here we go. Trump is live. Here we go. Just started right now. Here we go.
Really not going to stop. And I'm very proud to let you know that the leadership of India and Pakistan was unwavering, powerful, but unwavering in both cases. And having these, they really were, from the standpoint of having the strength and the wisdom and fortitude to fully know and to understand the gravity of the situation. And we helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it. That I can tell you. And all of a sudden they said, I think we're going to stop. and they have, and they did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war. Millions of people could have been killed. So I'm very proud of that. I also want to thank Vice President Vance and Secretary of State Rubio for their work and efforts. They worked very hard on that. We also, as you know, created a situation where the Houthis, for the first time ever, have ceased firing, and they've let it be known that they're not going to be firing at American ships anymore, not going to be firing at Americans anymore. This was a heavy barrage that lasted for approximately 50 days. And as you know, they've been in war essentially for forever. But over the last 10 years, they've been very difficult for other countries. Nobody was able to do what we did. But they stopped, and we take their word for it. Their surrogates and them directly said, we don't want to do this anymore. And so we were satisfied with that. In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs. And it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States. And they're already starting to come back now based on tariffs. Because they don't want to pay 25, 50, or 100% tariffs. So they're moving them back to the United States. I spoke to Tim Cook this morning, and he's going to, I think, even up his numbers, $500 billion. He's going to be building a lot of plants in the United States for Apple. And we look forward to that. I really do look forward to that. But the talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing. But one of the biggest things that we're doing, and I don't know if people realize this, but we made a great deal with China, great trade deal, but it was a much bigger deal originally, and then they canceled it right in the last day. Some of you faces I remember were there when that happened. I remember you. And we had a deal where they opened up their country to trade with the United States, and they took that away at the last moment, and then I canceled the whole thing. And then 6 months later, we ended up doing a smaller deal, but it was a big deal. It was $50 billion worth of product that they were going to purchase from our farmers, et cetera. And we agreed to that. People thought it was 15 because they were doing 15. We made it 50 because I misunderstood the 15. I said, you got to get 50. Because when I asked, if you remember the story, when I asked, what are we doing with them? My Secretary of Agriculture at the time, Sonny Perdue, said, sir, it's about 15 billion and we're asking for 15. And I thought he said 50. So I said, so they came back with the deal at 15. And I said, no way, I want 50 because you said 50. They said, sir, we didn't say that anyway. Bottom line, I said, go back and ask for 50. And they gave us 50. And they were honoring the deal. And we would call them up a lot for the corn and for the wheat and for everything. They were honoring the deal. And then when Biden got in, they no longer honored the deal. There was nobody to call. I would call on an average of once every 2 weeks to say, come on, you have to speed it up a little bit. And our farmers were doing great. I said to them, buy more land and bigger tractors, if you remember. That's what happened. But the deal was a very good deal. But the best part of the deal was that we opened up China. China agreed to open itself up to American business to go in. And it would have been a great thing, I think, for China. They would be able to see things that they haven't seen. They would be able to buy products that they have never been able to buy. Would have been great for American business. I think it would have brought unity between China, better unity between China and the United States. And the bottom line is that they canceled it the last day. We were all set to sign it. And then I went a little bit angry. I got a little angry. They said they canceled the deal. The deal was done. It was all ready to be signed. And people went over, they came back to me, sir, they don't want to sign the opening up China. Well, the biggest thing that we're discussing is the opening up China, and they've agreed to do that. But it's going to take a while to paper it. You know, that's not the easiest thing to paper. But that's the single, I think, to me, some people would disagree. Some people would say we're getting a lot of money with tariffs or whatever. But, you know, especially when you add what we already have. Because remember, we're already getting the 50% on steel and different things. That's not included in these numbers. So you can add that. But the biggest thing to me is the opening up. I think it would be fantastic for our businesses if we could go in and compete with China. It would be a lot of jobs for China. It would be, I think, at a time when they can frankly use the jobs. And that's what we're talking about. So that's a very, very important element to add. So when Scott, I watched him speak the other day, and I think he didn't want to say it, but I said, it's okay to say it. Look, if we don't get it, we don't get it. But if we don't get it, it won't be a positive thing. But if we do get it, I think it's maybe the most important thing to happen. Because if you think about it, we opened up our country to China. They have very few restrictions. And they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace. China will also suspend and remove all of its non-monetary barriers. They've agreed to do that. Well, they're very numerous. But again, to me, the biggest thing that came out of that meeting is they've agreed. Now we have to get it papered, but they've agreed to open up China. It's going to be great for everybody. And third, I'm very happy to announce that Idan Alexander, an American citizen who until recently most thought was no longer living, thought was dead, is going to be released in about 2 hours, actually. And he's going to be released before the eyes of Steve Witkoff, who has done a fantastic job. I know a lot of people that have a lot of talent. I know Steve had a lot of talent. But I know a lot of people with a lot of talent, but there's one that I thought had a special way about him, special personality, aside from being a good deal maker, had a special way about him, and it was Steve. Knew very little about the subject matter, who does, but he learned it in about 2 hours, and he's been fantastic. So I want to just thank Steve, but they're going to be releasing Idan in about 2 hours from now, or sometime today, let's say. And again, they thought he was dead just a short while ago. His parents are so happy. They're so happy. So it's, as you know, Idan's the only American citizen who's captured and held hostage by Hamas since October 7th, 2023. And he's coming home to his parents, which is really great news. I mean, to me, it's big news. They thought he was dead. So that's that. So we'll be heading there, and we'll be seeing 3 primary countries. You know all about that: Saudi Arabia, UAE, Qatar. On Thursday's meeting with Russia and Ukraine is very important. I was very insistent that meeting take place. I think good things can come out of that meeting. Stop the bloodshed of the horrible. It's a bloodbath. But that 5,000 more, it's really much more, I'm trying to be conservative, more than 5,000 soldiers. Russian, they're not American soldiers. They're from Russia, they're from Ukraine, but they're people. They're human souls, and they're being killed at levels that we haven't seen since the Second World War. And it's every week. a lot of drone fighting. It's a whole new form of warfare, and it's violent and vicious. And so that's it. I'd like to go back to China just for a second. They're very heavy on the fentanyl. We're charging them, as you know, 20% for the fact that they send fentanyl into our country. And they've agreed that they're going to stop that. And, they'll be rewarded by not having to pay, hundreds of billions of dollars in tariffs. So the fentanyl should stop. It comes from China. It's amazing. And comes through our southern border, comes through our northern border too, comes through Canada, and comes through our southern border, much more through the southern border. But so that's a very important subject to me, because everybody in this room has lost friends or people that have family members that have died of fentanyl. So there's a big incentive for China to stop, and I take them at their word. They're going to work on that, I think, very hard. And one thing, when they work on something, they get it done. So now I'm about to depart on a historic visit. Some of you are going with us to, as I said, Saudi Arabia, Qatar, and United Arab Emirates. Before I do, I'll sign one of the most consequential executive orders in our country's history. I don't think there's ever been anything signed like this, certainly not with respect to healthcare, nothing even close. I'm delighted to be joined on this occasion by Secretary of Health and Human Services, Robert F. Kennedy Jr., who is doing a really good job, I have to tell you that. CMS Administrator, a friend of mine, Dr. Mehmet Oz, who is an amazing guy. I was telling Bobby before, Oz had a very successful show, but it hurt his reputation. Because when you're in show business, it hurts your reputation a little bit. It's good for you, but in terms of professionalism and being a doctor, it sort of hurts your reputation. This guy went to the best schools, was the best, top of the line. Then he did a television show, became a success, made a lot of money, all that stuff, but it sort of hurt him. And you know who I compare that to? I hate to say this, but a special woman, Jeanine Pirro. She was the toughest, smartest DA, maybe in our countries, in our cities and states history, New York. She was really tough, really sharp. Then she did a show, and people didn't think of her quite the same way. She became more of an entertainment person, like Oz. Oz is not an entertainer. He's not really an entertainer. You know the real story. And she isn't either. She is unbelievable. She was one of the strongest district attorneys in the history of New York, highly respected, very tough, went after the drug dealers at a level that you don't see today anymore. And hopefully she's given up she's leaving the number one show on cable television, one of the number one shows on television, period, The Five, but they've got great people left behind, but she was a big part of it. And so I equated to that. Jeanine Pirro is unbelievable. FDA Commissioner Dr. Marty McCary, with a reputation that's second to none, and the job he's doing already has been fantastic. Thank you, Marty. And Director of National Institute of Health, Jay Bhattacharya, who has been, as you know, from Stanford, so highly regarded, and have all been working with us very hard on this. And the question they would ask, being a little bit new to the government aspect of it, is why doesn't somebody fight the drug price situation, meaning equalization? There's a term, it's called equalization. Nobody wants to mention that term. And I'm not knocking the drug companies. I'm really more knocking the countries than the drug companies, because they're forced to do things. But the drug lobby is the strongest lobby in this country, they say, the drug lobby. It's between that and lawyers, and they have a lot of power. But starting today, the United States will no longer subsidize the health care of foreign countries, which is what we were doing. We're subsidizing others' health care, countries where they paid a small fraction of what, for the same drug, that what we pay many, many times more for. And we'll no longer tolerate profiteering and price gouging from Big Pharma. But again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing, but they've gotten away with it, these countries. European Union has been brutal. And the drug companies actually told me stories. It was just brutal how they forced them. And European Union suing all our companies, Apple, Google, Meta. They're suing all of our companies. They end up, they have judges that are European Union centric, and they get rewarded 15 billion, 17 billion, 20 billion, and they use that to run their operation. Not going to happen any longer, that I can tell you. So what's been happening is we've been subsidizing other countries throughout the world, not just in Europe, throughout the world. European Union was the most difficult from what I understand. I mean, I'll tell you a story. A friend of mine who's a businessman, very, very, very top guy. Most of you would have heard of him. A highly neurotic, brilliant businessman, seriously overweight, and he takes the fat shot drug. And he called me up and he said, President, he calls me, he used to call me Donald, now he calls me President, so that's nice respect. But he's a rough guy, smart guy, very successful, very rich. I wouldn't even know how we would know this, but because he's got comments. President, could I ask you a question? What? I'm in London, and I just paid for this damn fat drug I take. I said, it's not working. He said, I just paid $88. And in New York, I pay $1,300. What the hell is going on? He said, so I checked, and it's the same box, made in the same plant, by the same company. It's the identical pill that I buy in New York. And here I'm paying $88 in London. In New York, I'm paying $1,300. Now, this is a great businessman, but he's not familiar with this crazy situation that we have. But he was stunned. But it was just one of those stories. And I brought it up with the drug companies, represented by somebody who's very, very smart, good person too. And we argued about it for about half hour. And then finally he just said, because they can't justify it, he just said, look, you got me. You got me. I can no longer they've been justifying this crap for years. They said, oh, it's research and development. Well, I said, well, research and development, other countries should pay research and development too. It's for their benefit. It was just one of those things. And the other countries would set a price and they'd meet the price and they'd say, if you don't meet the price, you can't sell it in our country. I said, well, then you walk away and, they'll call you back and they'll sell it in the country. But now they'll have to do that. So for the first time in many years, we'll slash the cost of prescription drugs and we will bring fairness to America. Drug prices will come down by much more, really, if you think 59. If you think of a drug that is sometimes 10 times more expensive, it's much more than the 59%. It depends on the way you want to analyze it. But in one way, you could analyze it that way. But between 59 and 80, and I guess even 90%. So when I worked so hard in the first term, and if I got prices down, remember, I was the only one to ever get prices down for a full year. But I'd get them down like 2%, and I thought it was like a big deal. Well, we're getting them down 60, 70, 80, 90%. But actually more than that, if you think about it in the way mathematically. And pharma has to say, we're sorry, but we'll not be able to do this any longer to these countries that have been so tough. They've been very tough, nasty. It's trade. It's trade. And pharma is also very powerful. And the Democrats have protected pharma. This is the Democrats have protected pharma. These are the Democrats. And by the way, I just called the Speaker of the House, and I just called the leader, our leader in the Senate, John Thune, Mike Johnson. Spoke to both of them. I said, when you score, you're going to have to score two things. You're going to have to, number one, score that hundreds of billions of dollars of tariff money is coming in. But even bigger than that, you're going to have to score that your cost for Medicaid and Medicare and just basically pharmaceuticals and drugs is going down at a level that nobody has ever seen before. It'll pay for the Golden Dome. I see the Golden Dome is there, see? That'll easily pay for the Golden Dome. And we'll have a lot of money left over. We need the Golden Dome, by the way. in this world. Although this world's a lot safer today than it was a week ago, and a lot safer than it was 6 months ago. We had people that had no clue what they were doing. So today, Americans spend 70% more for prescription drugs than we spent in the year 2000. Think of that. Our country has the highest drug prices anywhere in the world by sometimes a factor of 5, 6, 7, 8 times. It's not like they're slightly higher. They're 6, 7, 8 times. There are even cases of 10 times higher. So that you go 10 times more expensive for the same drug, that's big numbers. Even though the United States is home to only 4% of the world's population, pharmaceutical companies make more than 2/3 of their profits in America. So think of that. With 4% of the population, the pharmaceutical companies make most of their money, most of their profits from America. That's not a good thing. Now, I think, by the way, I have great respect for these companies and for the people that run them. I really do. And I think they did one of the greatest jobs in history for their company, convincing people for many years that this was a fair system. And nobody really understood why, but I figured it out. For years, pharmaceutical and drug companies have said that research and development costs were what they are, and for no reason whatsoever. They had to be borne by America alone. Not anymore, they don't. This means American patients were effectively subsidizing socialist healthcare systems in Germany, in all parts of the European Union. They were the toughest of all. They were nasty. And I see that. I see that with trade too. European Union is in many ways nastier than China. Okay? And we've just started with them. Oh, they'll come down a lot. You watch. We have all the cards. They treated us very unfairly. They sell us 13 million cars. We sell them none. They sell us their agricultural products. We sell them virtually none. They don't take our products. That gives us all the cards, and very unfair. So they're going to have to pay more for health care, and we're going to have to pay less. That's all it is. And believe it or not, because it's really the world we're talking about, not just the European Union, but because it's the world, the numbers are for the healthcare company not as bad as you would think. They'll make the same. I think the healthcare companies should make pretty much the same money. I really don't believe they should be affected very much, because it's just a redistribution of wealth. It's a redistribution where it could be the same top line, but it's going to be distributed differently. Europe's going to have to pay a little bit more. The rest of the world's going to have to pay a little bit more, and America's going to pay a lot less. Again, because it's a much smaller population than when you think of the whole world. So basically what we're doing is equalizing. There's a new word that I came up with, which I think is probably the best word. We're going to equalize, where we're all going to pay the same. We're going to pay what Europe's going to pay. We're going to all pay. Now, there may be some countries in dire need, and I would be willing to sacrifice that, and help them. But it's called most favored nation. We are going to pay the lowest price there is in the world. We will get whoever is paying the lowest price. That's the price that we're going to get. So remember that. So we're no longer paying 10 times more than another country. Whoever is paying the lowest price, we will look at that price and we will say that's the price we're going to pay. Most favored nations. That's what it is. One breast cancer drug costs Americans over $16,000 per bottle, but the same drug from the same factory, manufactured by the same company, is 1/6 that price in Australia and 1/10 that price in Sweden. 1/10 for the identical product. A common asthma drug costs almost $500 here in America, but costs less than $40 in the United Kingdom. So $40 in the United Kingdom, which is where this gentleman told me he paid a small amount for his shot. But think of that. So $40 versus $500 here. That's not even bad. There are much worse examples. And the weight loss drug, Ozempic, costs 10 times more in the United States than in the rest of the developed world. 10 times more. Why? Why? What did we do? Suckers. But we never had a president that had the courage to do this. And nobody knew the system like I do. I mean, I've gotten to know this system so well. And I don't think it's fair that it benefits Obamacare. Obamacare is a failure. It's not a good health care. It works. I made it work. I had an obligation to make it work, or an obligation to let it die. I chose that we had to make it work. I had to make it as good as possible. And I had a choice. I could have let it fail or make it as good as possible. As good as possible means it was still not very good, but it survived. And we did the right thing. But this makes everything work. And I don't want to have a bad form of healthcare work because of the fact I was able to cut drug prices by 80 or 90%. So we're going to maybe come up with something. I think this gives the Republicans a chance to actually do a healthcare that's much better than Obamacare and for less money, which if you guys would work on that along with Congress. But I do want to say that Democrats could have done this a long time ago. They have fought like hell for the drug companies, and they knew they were doing the wrong thing. And it's going to be very hard. I was just telling the leader and the speaker that it's going to be very hard for the Democrats to vote against the one big, beautiful deal. The greatest tax cuts in history, greatest everything. But now you have the big drug prices because that's going to be included. It makes that whole situation different from a scoring standpoint. I just told them, I called them up about this. I said, I'm going to do something that's going to be very monumental, and you're going to be scoring. You better tell your people that this is going to score really well, and then add hundreds of billions of dollars in tariffs to your list also. But as big as the tariffs are, this is something that really hits quickly. 5 years ago, I signed an executive order to confront this disaster, but only confront it in a minor way. It was a good confrontation, but never to this extent. And it took people a little while to understand a very complicated system. But Joe Biden, without any knowledge of what he was doing, terminated the policy and then pretended to negotiate under a new system. And then you take a look, 5 out of the 10 drugs that he negotiated are now over 200% more expensive in America than the rest of the world, and far more expensive than when he even got involved. Much more expensive than when he got involved. Joe Biden's plan was as you know, because you wrote about it, you don't say it very loudly, but it was a very big failure, was his whole presidency. First, I'm directing the U.S. trade representatives and Department of Commerce to begin investigations into foreign nations that extort drug companies by blocking their products unless they accept bottom line and very low dollar amounts for their product, unfairly shifting the cost burden onto American patients. And we'll be taking a look at that very strongly. The biggest thing we're going to do is we're going to tell those countries, like those represented by the European Union, that, that game is up. Sorry. And if they want to get cute, then they don't have to sell cars into the United States anymore. It's a very big subject. And they won't get cute because I'll defend the drug companies from that standpoint. They were given a price by the European unions and other countries. This is what you do. This is what we're going to pay. We're not going to pay any more. Let America pay the difference because there was a big shortfall. Let America pay it. And that's what we did, but we're not doing it anymore. Next, my administration will secure what we're calling most favored nations drug pricing. The principle is simple. Whatever the lowest price paid for a drug in other developed countries, that is the price that Americans will pay. And we're using the term other developed countries because there are some countries that need some additional help, and that's fine. I think that's very good. Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries. To accelerate these price restrictions and reductions, my administration will also cut out the middlemen. We're going to totally cut out the famous middlemen. Nobody knows who they are, middlemen. I've been hearing the term for 25 years, middlemen. I don't know who they are, but they're rich. That I can tell you. We're going to cut out the middlemen and facilitate the direct sale of drugs at the most favored nation price directly to the American citizen. So we're cutting out, Bobby, the middlemen. It's so important, right? They got to do that. They're worse than the drug companies. They don't even make a product, and they make a fortune. It's very smart business people, that I can tell you. If companies make no significant progress toward most favored nation pricing, which we will insist that they do, so I think I'm wasting time talking about it. We're going to insist upon it. And we'll insist, and we're going to help the drug companies with the other nations, because those other nations do a lot of trading with us. They need our trade, just like China needed us very badly. They need us just as badly. We will do whatever we have to with trade, just like we did some great things with trade with India and Pakistan. Really helped the situation, very heated situation. Could have lost millions of people, more than millions. I mean, many millions of people. And they want to do business with America, but we never used our powers that way. We never knew how. We never had people that knew how to do that. We'll also open up America's market to safe and legal imports of affordable drugs from other countries, putting dramatic downward pressure on prices. And if necessary, we'll investigate the drug companies, and we'll, in particular, investigate the countries that are doing this, and we will add it onto the price that we charge them for doing business in America. In other words, we'll add it on to tariffs if they don't do what is right, which is everybody should equalize. Everybody should pay the same price. And special interests may not like this very much, but the American people will. I am doing this for the American people. I'm doing this against the most powerful lobby in the world, probably the drug lobby, drug and pharmaceutical lobby. But it's one of the most important orders, I think, that's ever been signed, certainly with regard to healthcare or health in the history of our country. And it's an honor to be a part of it. And I'd like to ask Robert F. Kennedy to say a few words, please. Thank you.
Thank you, Mr. President. This is an extraordinary day. This is an issue that, I grew up in the Democratic Party, and every major Democratic leader for 20 years has been making this promise to the American people. This was the fulcrum of Bernie Sanders' runs for presidency, that he was going to eliminate this discrepancy between Europe and the United States. But as it turns out, none of them were doing it. It's one of these promises that politicians make to their constituents, knowing that they'll never have to do it. And the reason they'll never have to do it is because they know that Congress is controlled in so many ways by the pharmaceutical industry. There's at least one pharmaceutical lobbyist for every congressman, every senator on Capitol Hill, and every member of the Supreme Court. By some estimates, 3. Pharmaceutical companies, the industry itself, spends 3 times what the next largest lobbyist spends on lobbying. So this was an issue that people talked about, but nobody wanted to do anything because it was radioactive. They knew you couldn't get it by Congress. We now have a president who is a man of his word, who has the courage. President Trump was taking money from the pharmaceutical industry too. I think they gave you $100 million, but he can't be bought, unlike most of the politicians in this country. And he is standing here for the American people. I don't know what, there's writers like Lord Elizabeth Warren or Robert Reich who are saying that President Trump is on this side of the oligarchs. There has never been a president more willing to stand up to the oligarchs than President Donald Trump. And I'm very, very proud of you, Mr. President, for your courage, I'll say, because I don't want to be crude, your intestinal fortitude, your stiff spine, and your willingness to stand up for the American people. We have 4.2% of the world's population. Our country represents 75% of the revenues for pharmaceutical companies. We spend in our country $1,126 per capita on drugs. In Britain, they spend about $240. They spend 1/5 of what we do. And this is true across Europe. And the drug companies, Europeans, if you ask them, it made no sense what they were saying. America has to pay for this innovation or it's not going to happen. What President Trump is saying to our European partners is you got to raise the amount that you're paying for those drugs and pay for your share of the innovation. That the United States is no longer subsidizing that. If the Europeans raise the price of their drugs by just 20%, that is $10 trillion that can be spent on innovation, and the health of all people all across the globe is going to increase because we're going to have better products. So I'm just so grateful to be here today. I never thought that this would happen in my lifetime. I have a couple of kids who are Democrats, are big Bernie Sanders fans. And when I told them that this was going to happen, they had tears in their eyes because they thought this is never going to happen in our lifetime. And we finally have a president who's willing to stand up for the American people. Thank you. And Dr. Oz.
Thank you, Secretary Kennedy. This is the most powerful executive order on pharmacy pricing and healthcare ever in the history of our nation. And it's only happening because we have a president with the fortitude, the guts to stand up to the withering criticism and lobbying that's going to occur as soon as folks hear about the executive order. So on behalf of the child in Philadelphia who's got an autoimmune disease with a $1,000 a month drug, or the older woman in Los Angeles who's on a blood thinner who can't afford her copay, I want to thank President Trump. God bless you for having the guts to take on this industry. Thank you, sir. Thank you very much. So let's talk about the details a little bit. And this is primarily about equalization, as President Trump said. It's about fairness. Think of NATO as a metaphor. When President Trump said, you've got to pay a little more so it makes sense for all of us, they came up. And the European countries contributed. The same thing we believe will happen in this situation. Most people who have thought about this process agree that it is patently unfair to tolerate the numbers that Secretary Kennedy and President Trump have reflected to you. On this chart to my left is a list of the 10 drugs that were negotiated in the IRA. Again, this is the bill, the law that regulates a negotiation process. This is the best price that was able to be obtained by the Biden administration. And if you look at these numbers, they actually reflect how much on top of the most favored nation price was being paid by the United States. So the closest to me, and Bob, you can point to the Jardiance, the closest one, 289%, the one that's closest to you. That means that we are paying in America 4 times more than that drug costs in other countries. Again, 100% is the baseline. It's 289% above that baseline. It goes all the way down to when we're paying 50% more than any other country. That's the range. As was pointed out by President Trump, half the time we're paying 3 times more than is paid in other countries. It doesn't make any sense for the system. That stated, President Trump has over and over again indicated, and Secretary Kennedy reflected as well, we want innovation. We want our technology partners doing the best they can to make the best solutions for drugs that cure as many people in America and around the world as possible. By getting our allies to pay a bit more, as they should be, and they should have for many years been doing, will course correct a problem that's gotten out of hand. And by doing that in a thoughtful, effective way, we're going to be able to get the pharmaceutical industry whole. Those jobs will still be here, will still be productive, will still be curing cancer and a slew of other ailments that plague humanity. America will still be the leader in this space, but we'll be paying the appropriate amount, the right-sized amount for those tasks. So over the next 30 days, the 4 of us up here, together with people standing in the back of this room who are doing a lot of the heavy lifting, are going to be approaching pharmaceutical companies to talk specifically about what we want the most favored nation price to be based on the best data we have. We're looking forward to a thoughtful interaction with these corporate leaders, many of whom we've spoken to and in quiet will agree the system is not right the way it is. They're patriotic Americans. They want what's right. But the fact that in my lifetime, as Secretary Kennedy said, for the first time, we have a thoughtful and aggressive approach thanks to President Trump on taking on the special interests, should give all Americans confidence that this is an administration that stands for fairness and should chill the waters for those who believe they can push us away from our North Star, which is to take care of the American people. Mr. President, God bless you. Thank you. Jay, you want to go next? Sure.
So I teach economics at Stanford as well as health policy. And one thing that's really, really simple in economics is that when you have a persistent price difference for the same product between two countries, there is something deeply wrong. And what President Trump has done is a historic measure that should have been done a long time ago. What we're going to do is make sure that those prices become much closer to equal, like a competitive market you'd expect. Right now, what's happening is the American people are subsidizing in large fraction the research and development efforts for drug companies around the world by the higher prices that we pay. With this new order, Europe will share the burden of that. And in fact, if you may think of it as like as somehow it's like it's going after drug companies, actually it's helping drug companies. Because what we're also going to do with this order, what President Trump has done with this order, is he's said to European governments, look, if you are taking advantage of the drug companies by forcing them to charge very, very low prices, we're going to defend American drug companies in Europe. At the same time, we're standing up for the American consumer who's been paying far too high prices for far too long. I can go back decades to point to congressional reports after government report after government report of tremendously high drug prices, much higher than the rest of the world. And nothing has been done about it until this moment. And I'm really, really proud, President Trump, that you've done this. I'm really proud to be included in this and looking forward to the work ahead.
Thank you.
Thank you, Mr. President. On behalf of the many doctors I've talked to about this very issue, thank you for taking the bull by the horns. Presidents on both sides of the aisle have talked about this and floated it and said they've wanted to do it. So you've had the courage to do it. Thank you. I've been a surgical oncologist at Johns Hopkins for 22 years, and I have seen patients suffer. We didn't take an oath to heal patients and then watch their life get ruined financially, with their home, mortgage, retirement, going down the drain with GoFundMe campaigns, raising money from church communities and synagogues and friends they haven't seen in 20 years to try to raise money for what? For a system where Americans have been getting ripped off by 10, 12, 15 times higher prices than we see in other countries. The fundamental problem in healthcare is that we've had non-competitive markets. We can do little things around the edges, or we can transform those markets to competitive markets. And that's what this executive order does today. Imagine buying a Ford for $175,000, a regular car, and then hearing that people in London are buying it for $10,000 every day, all day long. That is the craziness of this system. We're going to do everything we can at the FDA to support this executive order. It's transformative. Thank you, Mr. President.
Thank you. Thank you very much. So thank you very much, everybody. I think it's a very important day. In many ways, you have, we'll start with the Houthis. We go to Pakistan and India. We go to what we did with China, the trade deal, and with UK. And by the way, many other deals are coming in very much. At a certain point, we'll just set the price because we know where we are, but we'll just set the price. But world trade is going to be terrific, and our country is going to be making a lot of money. Taxes are going to go down. Taxes are going to go down very, very substantially. But you look at all of the things that we've done, and now today I'm heading over. We'll see what we're going to do with respect to Iran. I think you have very good things happening there too, by the way. I think
All right, cool. That is pretty much it. That's what we got from Trump. It was a long press conference, but we got all the details right there. S&P 500 is red, 2.35% down. Sorry, 2.35% up, down from, I think, 3.2% at one point. So you do have some red candles right there, down from about 580 to 577. But market's still green on the day. Robinhood is, it was at almost 60. Now it's at 56. Nvidia was at 122. It's at 120. You had Palantir that's basically going red on the day. Tesla was at 320. Now it's at 315. Palantir is at 115.26. Palantir down 1.75%. In terms of some of these equities, I don't think anything Trump said in particular is creating this pain. SoFi from 1410 to 1382, still up 4% on the day. Meta from 635 to 627, still up 6% on the day. I don't think Trump said anything to cause, I don't even want to call it a sell-off, but it's like I guess, not as aggressive as a green candle that we had at 9:30. I think there's two things going on. Number one, it's 10:30, right? So 10:30, we tend to get a little bit of a dump. Algos tend to step in, and you get to tend to see hedge funds, money managers take some profits right here. Algorithmic trading, high frequency trading, that tends to happen 10:30. There's no real evidence on that. It's just historically that's what we've seen over the past 2 years, and so that's why there's a little bit of a 10:30 slam. But on top of that, like, we're still pretty damn green. The S&P 500 being up 2.35% of the day, I will take that any day of the week. We're above the 200-day moving average. And so I don't think Trump said anything to necessitate a red candle from being up 3.2%. It's just, hey, people are going to take some profits, right? Like, you're up 2% on the day on the S&P. That's going to cause a lot of stocks to be up 5 to 10%. A lot of stocks are now up 3 to 6% instead of 5 to 10% because people are taking some profits. And I think that's fair. In terms of Palantir, again, I mean, I will say this over and over again. Palantir is trading at an aggressive multiple. Nothing is happening to Palantir other than Palantir is, in my opinion, normalizing, hopefully, this triple digit range. So for people that want Palantir to go to 130, 140, 150, you know, you're just not going to get that level of excitement from me, because at the end of the day, Palantir has to grow into its valuation, and the valuation is aggressive, and it'll take some time to grow into it. And I think one of the best things that can happen this year is Palantir is able to just stay in this triple digit range unless they really put up crazy earnings and then eventually get to those higher valuations. But already Palantir is still trading at a $250 billion market cap. Like, that's aggressive. That's very aggressive. So Palantir is up 70% from the lows. If it's down 2% on a day where everything's pumping, it's not because something's wrong with Palantir. It's just because even holding these levels is not easy for a company that is not growing to the point where you would assume it should be able to trade at an almost $300 billion market cap. So for me, I just don't think there should be any complaining on Palantir. I mean, if you bought it at 110.20, maybe you're upset, but the longer it is able to stay in a range that is beyond the double digits, which hopefully is a thing of the past, but you never know, I think is a win for Palantir. So to me, I really don't see that big of a deal with Palantir going down. Now, Tessie, on the other hand, Palantir is still growing. Tesla is not growing anymore, at least for now, based on their latest earnings. The market doesn't care about that. The market is willing to give Tesla even more momentum. 315.93 right here, up 5.97% on the day, really getting some strong momentum. And essentially, Mr. Tim Walz was your bottom indicator. I mean, he said to sell at around 215. He said the stock would keep going down. That didn't happen. In fact, that quite literally was the bottom, even after some pretty aggressive headlines that were not good for Tesla, not to mention the earnings that were just like not good numbers. All of that considered, Tesla still being able to weather through the storm and the market being able to look towards the future, which is a FSD and robotics future, and pull forward that growth. HIMS right here was up 12%. Now HIMS is up 8%. Like, I see some people in the chat saying HIMS is dumping. Again, HIMS was up 100% last week. It's up 8% on the day. I don't know what clarifies as a dump or classifies as a dump, but 12% up instead of, or 8% instead of 12% up, to me is just not a dump. It's a red candle. It's just not a dump. I mean, HIMS could go back to 45, and I think most long-term HIMS shareholders would be relatively happy, given the thing was $25 2 weeks ago. So I think a lot of this is just tampering expectations. And going back to what I was saying in the beginning of the show, I really do think this is a covered call type of market. I think this is a covered call type of market. This is a market where you can write a covered call. You might be under pressure for a little bit. You might have to roll it, but it's not 2024 where you write a covered call on Palantir at 45 when it's at 35, and then you're done because it just goes to the moon. This is a market where you could write a covered call at 125 on Palantir, and even if it's under pressure, you're able to manage it, which means I think you can play the volatility of this market. At least that's one way of hedging that is not, selling out of everything and missing all the upside. That I think is not the worst thing in the world. Tesla right here, 317, that's up 6.3%. Palantir again, down a little bit. NVIDIA 120, that's losing a little bit of its momentum, still up 3.4%. And then Hoodie right here, 5630, basically at levels it was at last week, even though it's up 3% right here, but down from that 59 level range as well. So that's what we got going on here in the markets. Now, what do people think about Trump's announcement? Very curious to hear what people think. I think Bernie Sanders and Elizabeth Warren are going to have a hard time critiquing this move by Trump, in my opinion. And the reason for that is because, well, he's doing what Bernie Sanders, Dr. Oz was right, or RFK was right when he said this. Bernie Sanders literally ran on this policy back in 2015, which was to have a cap on drug prices in the United States. And I kind of like the way that Trump framed it. He said it's not really the United States being like socialist. It's rather the United States stopping the subsidization of other socialist healthcare systems. I know that's an over generalized way of explaining it, but essentially his argument is, hey, Ozempic or what he refers to as the fat shot drug, costs $88 in London, but $1,300 in NYC. We need to change that. We need to change that. And if the way to change that is by subsidizing or by stopping the subsidization of costs from these pharmaceutical companies, it's not that the pharma companies like the Eli Lilly's or the Johnsons & Johnsons are going to lose their profits. It's rather they're going to get a redistribution of their profits from, for example, Europe starting to pay a lot more than what the United States is having to pay. The XLV healthcare ETF is the thing everyone should keep an eye on. This has all the biggest healthcare companies in the world: Eli Lilly, UNH, AbbVie, Johnson & Johnson, et cetera. That ETF you would think would be down on the day. It's up 1.45%. So short pharma did not really play out, at least the thesis so far. Again, we need to get more details on what Trump is saying. But if this really is just Eli Lilly gets more of their revenue from Europe instead of all of it from the United States, and they still get to maintain their profit margins, even if the revenue is redistributed, then maybe not the worst thing in the world. Maybe not the worst thing in the world in the context of some of these pharma companies. Barzot says this new EO with banning pharma ads will be a huge benefit for American citizens. Okay, so Jim Cramer this morning was pretty bearish against this EO, this executive order around pharma. I saw a couple other CNBC Twitter personalities also posting about how they didn't think this was a good executive order. If anyone has watched CNBC for even 1 minute in their life, you talk about pharmaceutical advertising. Pharmaceutical advertising spends $19 billion. They're one of the top 5 spenders of advertising on television in particular in the United States. And CNBC is riddled with pharmaceutical ads. So I think just make sure to watch out for some of the biases. I'm not sponsored by any pharma company, so I can kind of speak my mind right here. But the Kramers of the world, the CNBC, these guys, they've made millions and millions of dollars in their lifetime subsidized by pharmaceutical companies that advertise within every 30 seconds of their TV shows. So I think it's one thing to watch out for as well. If you see some personalities that are very against it, just try to look into why you think they're against it versus taking their opinion at face value. Kris Patel, good morning. How are you?
You know, I've always been very honest with how I craft my opinions. So when the Trump administration makes a boneheaded move, I'll say it. If the Biden administration makes a boneheaded move, I'll say it. If they make good moves, I'll say it. That's just how it is. And let me tell you something. This was probably one of the, I personally, I was listening to it, I was clapping. Okay. That's how big of a deal this is for the United States, especially in the healthcare realm. I've worked in healthcare my entire life. And let me tell you, one of the most egregious things I've ever seen, and I've seen this happen, where people get shortchanged, especially Americans. We get shortchanged on healthcare and the cost of healthcare, primarily because there's all these middlemen who have all this lobbying power over how drug pricing happens, and they do it in a very, very untransparent way, and it ends up costing time, energy, money that basically is a complete fucking waste. All right. If you are a physician in the chat right now or a pharmacist, you know exactly what I'm talking about, how you need to get a fucking pre-authorization for something that's medically necessary, but you got to spend a fucking hour and a half dealing with an asshole on the other side of the phone trying to get something paid for, right? Now, here's the part that really blows people's mind.
Okay, but before you continue, just remember there's kids watching, so we got to take that words down to okay. Go ahead. I love the passion though. I love it. Go ahead.
The thing that really pisses you off, and it should piss everyone off, these PBMs were created for a good purpose. Basically, the way that it was supposed to work is a pharmaceutical company would make a drug, right? Let's say it was costing $20. You and your insurance carrier would contract a PBM to do the negotiation for you. They would manage the benefits for you, in which case they would go to the pharmaceutical company and say, look, I have an insurance that covers 1 million people. Give my members the best deal possible. So the pharmaceutical companies would say, yes, sir, we'll give you a $10 instead of $20. We'll charge you $10, right?
Right.
The PBMs would get a $5 cut from that for doing the work, negotiating, that they would get a cut from that, right? And that's where the poison started, okay? Because now the pharmaceutical benefit manager, their entire incentive structure is, wait, if we can get this negotiated deal to get that $5, Why don't we go to the pharmaceutical company and says, hey, why don't you raise your prices to $40? This way we can go to our members and say, look, we negotiated half off. It's going to only cost you $20 where it could have cost you $40 before. So we get a cut of that now. So we get a $10 cut. You see how they just doubled up their profits without doing nothing? And this is the bullshit that's happening in the background. So the cost of drugs basically keep going higher. These PBMs keep making more money, right? And look at some of the PBMs. Look them up, like how much money these guys make. It's insane. And you know what's even more messed up? Doctors have to now call. Sometimes these drugs are so overpriced because the PBMs made them so overpriced. The access portion of the drug means now the doctor has to call and say, hey, my patient needs this drug. And they literally sometimes have to spend an hour to, and let me tell you, the amount.
So real quick, these are the middleman that Trump's talking to. Right?
Yeah. Right. Now, here's the thing. If we have a pricing structure where it's like whoever the Europeans, whoever the most developed country is, whatever their pricing is, there's a standard pricing for us. These PBMs can't say shit. You know, that's the standard price. It's $20 in Britain. There you go. There's no need to negotiate. Why are you negotiating for a better price than it's already existing? There you go. So now you cut out all of these people from this BS, bro. Transparency in healthcare is one of the most fundamental things that's necessary. One of the things, and let me, my wife's a pharmacist. She can tell you, if you go to the pharmacy counter and you say, I have insurance, you're going to pay a certain amount. It's probably going to be more than the actual cost if you just told them I don't have insurance. Can you freaking believe that shit? Because the way that this whole structure is set up, it's a fucking corrupt ass system, dude. Even in hospitals, we're forced to make like certain moves that are just like, I'll give you an example. I don't work there anymore, so I don't really give a shit. Okay. I'm a human being. I've had patients come in, they need an MRI. Okay. And the insurance company will not approve that MRI. And it could be something that could be very critical. Okay. I had a patient who had possible glioblastoma. Okay. They needed an MRI to determine if something like this, and a glioblastoma is very rare, but it's a fatal thing if it's not treated. The insurance companies literally spend weeks saying, oh no, you should get this instead. No, it's not clinically appropriate. You should get that instead. The neurologist was like, look, man, I just need an MRI. So I said, you know what, doc? Guess what we're going to do? We're going to send this patient to the ER, say they have headaches, and we're going to rule out a stroke with an MRI machine. Okay. You know what happens in the ER? You don't need approval because it's an emergency procedure, right? We fucking did it. And guess what? The patient had a glioblastoma. And we ended up treating it. They ended up treating it. We had to transfer the patient out because we didn't do it. But that is the kind of shady
they probably made more money on the treatment versus
the fact that we have to do shady shit like that just to get a patient treated is fucked up. Okay. Anyone who works in the ER, you know exactly what I'm talking about. If you're a nurse, you know what I'm talking about. I've walked patients to the ER and be like, look, this patient, they need this thing. We're going to get it done. And we're going to get it done now. And this is how we're going to get it done. And you know what? Most providers, because we're all fucking humans.
All right, Chris, we really got to stop the F words, bro. We got
all right. We basically will just say, you know what? Let's go. Let's do what we need to. And you know why we have to do it? To get around these guys.
Okay, so because you have some knowledge and experience on this, I don't know you were this educated on this. I have some questions for you then. All right. When Trump says we will redistribute the profits or the revenues and it won't be a hit to drug companies, does that make sense? And the sort of subparts of that question is the United States subsidizing Europe's socialist system?
Yes and no. The Europeans are going to try to get the best deal for their patients. That's their job. Okay, why would you ever want to criticize them about that? Now, on the other hand, the US, we've always been like, oh yeah, let's just keep innovating. Let's keep innovating. And we've always been the guys that are like, yeah, you know what? Healthcare is a very important thing. So let's keep paying it out. But here's the thing. Drug discovery happened before we were paying all this money. Okay. Drug discovery is going to happen after you're doing this. Okay. Will it slow down progress a little bit? I'm sure it will. But guess what? Everywhere around the world, the Japanese are doing research. The Chinese are doing research. We're doing research. Australia, everyone does research. Medicine does not slow down because, oh, you know what? I can't buy my third Mercedes.
Right.
You know, most doctors, even if they're driving a Ferrari, they're not going to say, you know what? I'm not going to be a doctor because I can't drive a Ferrari anymore. You know?
So,
Yeah,
so when
sorry.
Trump says, okay, instead of the American paying $1,300 for Ozempic and the Brit paying 88, both of us might pay 500 each, right? Or whatever the numbers work out to. Do you think that's like feasible? Will Eli Lilly and J&J, will they be able to like?
They don't have a choice. They don't have a choice.
Hmm.
You know, one of the things that I hope Bobby Kennedy really enforces is we need to get America to be a lot more healthier, right? It's almost like this system that we've created is we shoot up all these hormones, all these drugs into like the food system that we have, where it has all this extra stuff on it. We Americans become unhealthy, and then we become dependent on these pharmaceutical companies to basically survive. And now it costs money. Like, okay, it costs the government money to put people on SNAP. They get unhealthy, they get fat, and now the pharmaceutical companies step in, and now CMS, which is Medicaid, Medicare, and a lot of people are on Medicaid now. Like, if you look at the total population of the United States that is on Medicaid, it went from like 2% in the 1970s and 80s to almost 22% of the adult population is on Medicaid. And Medicaid is for low income people, right? So
one in 5 people.
Yeah. It's insane. And so now if you look at the cost of Medicaid, it costs us $1 trillion a year. Medicare costs us another $1 trillion. That's $2 trillion a year in healthcare spending in the United States.
Okay, so here's my next question. Ro Khanna, Democrat from California, he tweeted today, "Hey, Trump, love the idea, but why don't you do it through Congress? Why are you doing it through an executive order?" So 2 questions.
Because Congress is paid for the pharma companies, dude.
Well, so the follow-up question here is, can an executive order actually make any progress on this? Or do you need Congress?
Yes, for one specific reason. If you shed light on this matter, and now a bill comes across that says, hey, we're going to do exactly what this executive order says, any of these Democrats or Republicans that vote against it, you know who's bought and paid for. And let me tell you, every one of them should be out on their asses in November.
Is this why people a couple months ago were critiquing Warren when she was against one of these bills? Because I'm assuming a lot of her funding was also done by pharmaceuticals.
Yep. Dude, Cory Booker, okay, one of the most powerful people in Congress on the Democrat side. Look at the lobbying groups that pay for this guy. It's all big pharma. Okay.
Okay, so all right, so we got Congress that's bought up by the pharma companies, RFK kind of calling them out, Trump calling them out today as well. So I guess the question becomes, what do the pharma companies do? Are they going to increase their advertising, or are they going to lobby harder? Like, how do you think they push back against this?
I have no clue, but as a member of the general public and as a voting person, let me tell you, this is one of those things that like literally touches me in a way that like I've experienced this. Okay. You've probably experienced this because you've had, your parents had to go to the hospital and do all this stuff. We have a system here in the United States. We have a great healthcare system. Okay. In terms of the people that actually get the education, that put in the work, like the amount of controls that we have, these are great things that we have. But one thing that's really toxic, it's the amount of money that gets spent on the paperwork, the administrative costs that are in healthcare. If we eliminated a portion of that administrative care, we can actually take that money, put it back into healthcare providers, which is more important so that the access to people, to drugs becomes more available. Half the people that end up getting chronically, like, one of the challenges in healthcare for us is preventative medicine, like making sure that people actually are healthy from the get-go so they don't need to be in the hospital, going back and forth. Invest in making people healthier, dude. Like get all these chemicals out of our food systems, get all of this stuff out. You know what the challenge is though? Every one of these corporations, they're all bought and paid for, and they all lobby the shit out of Congress. And you know what Congress does? They slow roll things. This is the first president who's actually come out and said, no, we're not going to change like little things here and there. We're just gonna break the ceiling and just do what we need to do.
Okay,
And
let's dive deeper. Why is Trump doing this?
because it's necessary.
No,
It's
but
absolutely
besides,
necessary.
but besides, like, do you think there's any other like, is he trying to get like, is there a plan here, or is this something? Because he didn't run on this in the campaign, not to my understanding.
Because
Like,
guys like Bobby Kennedy, who've been trying to advocate for stuff like this for the last 50 years, they've always been sidelined. Okay. Look at what happened to Bobby Kennedy while he was running. Okay. He said, look, all of these dyes that are in there, and what did they try to do? They tried to ostracize him and make him sound like he's some kind of fucking fool. Sorry again, I cursed. But you know, every one of them tried to sideline, like, oh, look, no, you shouldn't. Literally, they try to make people feel like it's like you're crazy, like you don't know what you're talking about, you're anti-science. No, he's not anti-science, dude. He's just anti-stupidity. Most of the policies that are coming out of this administration are common sense. Okay.
right.
Some of the trade stuff, believe it or not, even the tariffs, I told you, I agree up to about 10%. But then when you go full retardo and you do like, Peter Retardo and you go like 45%, bro, that's not working. That's not going to work. You'll crash the markets. And I think one of the great things about this president is that when the market says something and it goes in the opposite direction, he's willing to pivot. Good for him. I'm all for it.
This seems like the first big thing that close to 100% of Americans would be on board with. I mean, if you're not bought and sold by pharma, there is no world in which I think, and because all of us, have family members that have been to the hospital before, we've been through, like, so all of us, I think, can agree that if I had diabetes or if I'm on Ozempic or whatever it is, I would want to pay significantly less than what my friend across the pond is paying for if the drug is the same. I can't see anyone coming up with a bear case against that.
We can't afford to let the status quo keep happening. Okay. We're spending, I'm telling you, look at the amount of money that we're spending. Even if you look at it on a GDP basis, look at the amount of money that the United States is spending on healthcare and tell me that is what is, if that's sustainable. Okay. At some point, we're going to get to the point where we're going to have to cut healthcare, like for people.
Yeah, that's not going to work.
It's
not going to work.
You don't want to get into like hyperinflation and the country goes poor and can't manage its debt load. And one of the reasons why is because our spending on healthcare has just been insane.
So I'm going to be paying attention all day, and I will give you guys the updates as soon as I get it on what Elizabeth Warren and Bernie's response to this is, because they haven't commented publicly yet. I would have to imagine they would embrace this. Like,
yeah, man. Like,
and if they don't, then we've got some issues.
Yo, seriously, if literally this is the best part about the Trump executive order. I told you. Now the Democrats have to respond because they've been pitching this idea, like especially Bernie. Like, what's his name? JFK said it. Bernie's been pitching this idea. Okay,
2015.
So how are you gonna turn on him? The one thing I hope, see, like you look at some of these topics that the Democrats have. These are Democrat talking points from about, I would say, 15 years ago. Like controlling immigration. That is a Democrat talking point from like 20 years ago. Bill Clinton said it, like, we can't do this. Welfare reform, that happened under Newt Gingrich and Bill Clinton, okay? Where Bill Clinton was the president, Newt Gingrich was in Congress with the Republicans. When we got our first time the fiscal health in order in the 90s, who is the one that said we need to stop welfare queens? It's Bill Clinton.
Yeah.
He said, no, we got too many people sitting on the sidelines, basically just collecting checks. We need to get them off of that dole. We need to control our spending. And guess what happened? That was a Democratic talking point back then. Look at Nancy Pelosi's speeches about immigration in the 90s and the 2000s. They were all anti-immigration.
Yeah, I mean, just to give some context right here, this is a 1-minute clip of Bernie talking about this back from the 1980s around pharma companies.
Pharmaceutical industry is the most profitable industry in this country. When we talk about the disgust with what's going on in Washington, this is what we are talking about. Pharmaceutical industry is spending in order to make sure we continue, to pay the highest prices in the world. This industry, which apparently cannot lower prescription drug costs for the dying and the suffering, have more than enough money to plaster the airwaves and newspapers with their advertising. And some of us lead the fight against these outrageously high drug prices. The industry is simply pouring more and more money into their effort to defeat us. Pharmaceutical industry spends more money on campaign contributions and lobbying than does any other industry. They are
Dude, kind of hard for him to be against this. This is
Listen,
what he's wanted.
if I
for
was
so long.
Trump, I would take that video that you just did and tweet that shit.
Yep.
You know.
Yep. I mean, I think so Kramer was talking about how this is going to get challenged in the courts. I definitely think the pharma companies will challenge it, but I think that, as you said, that's going to create a lot of people to wake up and be like, why are they challenging it as aggressively? Right. And then why aren't Congress people supporting the executive order, and they have to, they're responsible to their constituents. And so if it creates sort of a mass uprising in terms of people calling their senators and representatives and saying, hey, what's going on here? We can see a lot more momentum.
Some of the things that you'll see, like, I'll tell you, lobbying, getting money out of politics is probably one of the most important things that we can do. And I think the decision to do Citizens United really needs to be like overturned because of that decision. We've got so much dark pools of capital just floating around DC, and that's why we have so many of these problems. I mean, I'll give you just a very I'll give you an example of something that I personally have had to deal with. So I work in radiology, and one of the things that we have is we have certain equipment that we have to buy. One of the things that we have is like these radiology screens. They're very expensive. They're about $10,000 to $20,000 per screen. Okay, they're made by a company called Barco. Barco was able to successfully lobby New York State to have the highest regulatory requirements for these monitors. So they have to be tested quarterly. They have to have a physicist verify that they were tested. They have to have a certain brightness level. All of these things that, in my opinion, don't really impact the quality of the read, or barely impact the quality of the read. But because of these requirements, now every 5 to 10 years, we have to replace these monitors. You want to know something really funny? These guys came up with their own compliance software that manages the compliance portion of it, and they charge a reoccurring revenue on a per thing basis, per monitor basis. Okay. So one, they wrote the regulation on how these things should be tested. They created software to make it easy to keep logs of this stuff, right? And they pushed New York State to enforce this. New York State's the only one that does it in this area. Now, here's the thing. Every 10 years now, we have to replace these, not even 10, like 5 years, we have to replace these things. Even if they're fully functioning, everything is good, we have to replace them, okay? It costs us a crap ton of money for something that literally could last quite some time.
It's a screen. At the end of the day, it's a monitor, right?
Yeah.
It's a specialized one, but you can't imagine that having to be replaced every single year.
Yeah, their argument is, the brightness level, the dim, like if it dims like even like less than like 2% or whatever over the period of a time, it's not sufficient to be read. It diminishes the quality. If you ask most radiologists, pretty much every radiologist, like, doesn't diminish anything, But guess what? It all adds back to the cost. Now we have like radiation monitoring, like that stuff that we have to do, which is fine, which is actually a good thing. But then everyone keeps pushing to get newer and newer and newer machines. Everything, like GE Healthcare, they're like, oh, look, this CT machine puts out less radiation. But if you look at the actual like output, it's like barely registerable. But no, now you have to get the newest one, So a lot of the stuff that's being pushed in healthcare is being pushed by device manufacturers. It's being pushed by pharmaceutical companies, and it's also pushed by it pretty much is everyone in healthcare is looking out there to make money. All right, it's one of the most profitable things. You want to know what the best parts about being in a hospital in procurement though is? Because I was in management, so I had to like work on deals. Bro, if you ever saw the pharmacy sales reps, telling you, bro, they recruit them straight out of like the sororities, bro, from FSU. Okay. Oh my God, bro. Like sometimes they just walk in and they give you that look, and it's like,
Oh, they'll definitely sell you some drugs, right? They'll definitely sell some drugs.
and the thing is, they'll take you out to lunch, like they'll invite you to all of these things. I mean, bro, I always turn that shit down. I was like, I'm good. I'm good. I am not doing that nonsense. But let me tell you, and if you ever go to a doctor's office, bro, it's like they just like they're like honeybees just swarming you, trying to get you to buy this newfangled drug that barely does anything, but whatever, you know.
I think now the question is going to be, where does this EO go from here? But in your opinion, even if the EO doesn't go far, the point is Trump started the discussion.
Yeah, my wife is a pharmacist, so she deals with this shit too. So they'll send honeypot dudes that are like, oh, let's go to Peter Luger's, and my wife's like, let's go, but she'll grab like an extra steak and bring it home to me. So I'm like, so she's like, oh, I'm gonna go to dinner with a pharma rep. Go right ahead, honey. Bring me home some of this good food. You know.
Well, if they're spending this much on TV ads, you would imagine they spend as much money on pharma reps, and you think the TV ads are? I mean, like those have been omnipresent inside of financial news media for a very long time, right?
Yeah.
Anyone with CNBC, Bloomberg. So from that perspective, I think you would agree, if you're listening to mainstream media talk about this executive order, it would behoove you to remember that they are literally in the next 5 minutes after that segment, you will see an ad for whatever pharmaceutical company, right?
Yeah.
So it's just gonna be hard for them. I mean, it's one of the reasons they push the vaccine so heavily, right? Like
It's not, believe it or not, it's not just the pharma companies though. It's also the device manufacturers too. Like if you look at a prosthetic hip that Stryker and Zimmer make here in the US, and then you look at the pricing that they have for the same artificial hip in Europe, it's the same thing that's happening. We pay way more compared to they do.
So do you realistically think the US will have to pay less and Europe will pay more? Do you think there will be a level of parity between both of us, or how do you think it plays out?
I mean, it depends on Congress. It depends on the president willing to push this topic. I think the Europeans still have a significant amount of power because they do spend a lot of money on healthcare. You know, don't get me wrong. Like, don't think that Europe is only paying like a very small percentage of their GDP in healthcare. Like, it's not the case at all. They still pay a significant amount. But what it does is it puts pressure on the pharma companies to work to get rid of these middlemen. I'm telling you, it's these damn middlemen that need to get squeezed out, you know? Because I'm telling you, if you have like the total cost and 30% or 40% of the cost of healthcare is being eaten away by administrative costs, you know, it's not the pharma companies, it's not the providers, it's these damn middlemen that basically are making buttloads of money in between.
It's a pretty radical thing, bro. I mean, he could spend the next couple of years trying to execute on this. So hopefully RFK has got a good team behind him, and they can, because Trump's got, you know, other stuff to focus on as well. But if they get this done in the next 4 years, I mean, this in and of itself would make the presidency something that changes lives for the next couple of decades.
Yeah. Oh yeah. Just slowing down the growth in healthcare spending. If he can get that done, bro, that's a big savings for the US. Huge savings, you know. So right. I don't know how he's gonna get it done, brother. I don't know. But the one good thing is he's willing to shine light on a lot of things that other politicians will not talk about. And you have to give him credit for that.
And this is, you know, I'm happy you're saying this today, because a lot of people have listened to you even last night and they don't agree with your economic analysis on tariffs. But I think this is you showing you're pretty damn objective around. I mean, you voted for the guy, right? You can praise him when you like what he does and critique him when you don't.
Yeah. And that's how it should be, man. As a voter, you know, you can't be like a single party voter, be like, my dear leader, I agree with everything my dear leader says or does. Like, nah, bro, if you really have the freedom if you really believe in freedom of speech, freedom of choice, you got to voice your opinion, you know, whether that means you agree or you disagree, you know.
Right.
Sometimes you can agree with the message, you may not agree with the execution of it. That's another thing, you know. So I would say critiquing things is a healthy part of a democracy that usually ends up with the best outcomes.
Right.
Like I told you, like look at you look at China and their centrally planned economy. The outcomes for them with the one child policy, you couldn't critique it. You couldn't critique the party. What happened? It ended up being a complete failure that now might result in China having, serious issues with old age. The what do you call it? With a population that's getting older, and the younger population, there's not enough people to replace it, right? So I think we have to come to terms that people have to be objective and be able to say what they have. I mean, what they're feeling, and sometimes, if enough people get together and have the same kind of pushback, then it does provide for an avenue of contention that makes politicians rethink what they're doing. And like I said, the public pressure and the bully pulpit are very important things. So, like right now, by Trump putting this out there, he's using the bully pulpit to basically now get all of these people in Congress to be like, oh crap, like I don't care what this pharmaceutical rep says to me. I don't want to lose my seat because I don't want the general public coming after me, you know?
Okay, last question for you, Kris. Your quick reaction to this detail we got on the trade deal. USA 145 to 30, China 125 to 10. Markets, up nicely today, but selling off a little bit right here. S&P up 2%. Bullish or not? What do you think?
I mean, it's bullish because the expectations have been rolled back to a much more manageable amount. And I think that's one of the great things about Scott Bessent. We have to literally, I hope we give this man the Medal of Freedom for getting us off of this thing. Okay. He did his part, negotiated what we needed to negotiate. I'm not saying everything is smooth and clear from now on. I'm sure that there's some structural changes in the background that are happening that, it's like a game of whack-a-mole that we're going to have to play with the Chinese. It's not something that's going to be cured overnight, but we're headed in the right direction again. I think Liberation Day was one of those moments in history where I think just the general market just got freaked out. Be like, what the hell? Like, and the thing is, the reason why is because it was like someone dropping a bomb, So now I think we're getting to a point where trade policy is starting to normalize. The markets like that. And the one thing, and I highlighted this on my Patreon, if you go to it, and I posted the premier from China, and they put it on the US, go to the Chinese embassy in the United States, whatever. They posted on Twitter. The Chinese are looking for global stability and certainty. Like, I like that they said that, because that means that even they know that the United States, if they, right there at the end, look at what they said, so as to push for new developments in China-US economic trade relations and inject more certainty and stability into the world economy. That's the Chinese saying this. That's not we're saying this. The Chinese said this. Okay.
Right.
So for investors, this is a big positive sign, because if there's one thing that the markets like, it's those two things. They want certainty and they want stability. So this way you can invest money and know that, the deals that you're making are not going to get flipped on their heads in a month because someone said so,
Right.
And also at the same time, if the United States continues to be a stable economy, that's a big market for China. They don't want to lose us as a giant, consumer, because then their deflationary problems become even worse.
Yeah, it seems like what I got from this Geneva conference they had is that the speed at which they came to a framework for a negotiation means that China is getting sick and tired of this as well.
Well, they need us and we need them. Okay. They have a problem with deflation. We have a problem with inflation. We're natural allies when it comes to defeating both of our problems. We can buy more of their stuff, right? And they could, and because then it would cure their deflation problem, right? And as they go more consumer, and we have an inflation problem, which means that if we end up becoming more stable and our government bonds come back down again, our fiscal health gets back to normal again, right? And now all of a sudden we don't have an inflation problem. So
right.
It works in both ways, where economics, if you're in the, it's almost like you need something, I need something. If we work together, we both get something out of it. It's a win-win. So why not do it that way?
Right. All right, Kris, thank you. We appreciate your passionate thoughts. And
I just want to apologize to everyone for my cursing when it came to the healthcare topic, but trust me, it hits at home for me because I work in healthcare. Okay, it's one of those things that, like, literally, as I was in my 20s and growing up, I saw this firsthand. It's one of those things that touches me to no ends because, like I said, you see it in person and you see it happen right in front of you. So that's why I'm very passionate about that. It's one of those things, and it's just one of those things that's like a lightning rod to me. So whenever something like this comes up and someone's actually taking action for it, it's
matters.
important to voice that.
Yeah, and guys, I personally could not care less if Kris curses. I just know there's thousands of you. You have kids in the background, so that's I just want to do that for you guys. But
yeah.
All right, Kris, we appreciate it. There's his Twitter right there in the chat. We'll hear more from you later this week. And looks like this executive order is not the worst thing in the world, and hopefully it goes through.
Take care. Have a good one.
Take care, Kris. Bye-bye. All right, guys, I have to get out of here. It is 11:17, but before I leave, for those that didn't see the news, we got another piece of news right here. Ladies and gentlemen, Bank of America raises their price target on Palantir from 125 to 150. 125 to 150. So dude, they don't care anymore. They're just like, you know what? It's freaking Palantir. It is freaking Palantir. This is now a street high target. Dan Ives is at 140. Mariana was like, you know what? Screw that. We're going to 150. And there it is. Now, why is this really important? Two reasons. Number one, Mariana is not, she's one of the best analysts that I've ever read in terms of equity sell side reports. She is not a pie in the sky throwing out numbers. She doesn't care, yada, yada. Is she a bit aggressive with her multiples? Sure, but that's because she's been covering Palantir since $6 and she kind of really sees the vision, right? So she's been there from the beginning. So she's naturally going to have a little bit more of a bias on extenuating the premium on the stock, but she is not an idiot. I had the privilege of meeting her back in DC around this time, May of 2024. And I got to know a lot about her background, and she covers defense more than she covers software. So she's not a JP Morgan person that completely missed Palantir last year because software multiple, they can't understand it, SaaS, yada, yada. What about Salesforce? What about Snowflake? She's a defense analyst. So she covers Boeing and Lockheed Martin and Raytheon. She just happens to understand technology as well. So Palantir, in the intersection of defense and technology, she saw Titan before Titan happened. She saw the Golden Dome before the Golden Dome theoretically could happen. And that's why I think she's been ahead of the curve on all the other institutional analysts when it comes to Palantir. So the reason this is really important is, number one, I think she believes these guys can grow into the valuation, which is why she's raising the price target and saying that, hey, Palantir has a shot to really be able to put up the government and software growth in order to get there. Number two, I've been saying this for the past couple of weeks, but we got to normalize triple digits. And when you get a Bank of America, which is highly respected, to say, forget 125, we think 150 is the range, then anything below 150, which is still triple digits, at least, up until 100, theoretically has a chance to normalize. Obviously, we got macro volatility, we got random stuff with interest rates and Palantir earnings, and you got all these different catalysts. But if we are done with the days of double digits, I don't know if the bears are going to be able to stomach that, because from every bear post that I've read over the past couple of weeks, they are committed to this thing going back to 60, 70, and it could happen. It absolutely could happen. But what if it doesn't? What if it, it's like, it's obviously too soon to tell, but you at least got Bank of America saying, nope, we think it's going higher. We think they can grow into the valuation, and we are trying to normalize getting their clients who pay a lot of money for Bank of America's research to buy this stock below 150, because if it's going to 150, anything below 150 is going to be profitable in terms of a buy. And as a result, that may continue to pile up on the momentum for Palantir. So there you go. That's what we got. That's what we got for Palantir. And overall, not a bad day in the market so far. We still have a lot of time left. I'll be back in the market close at 3:45. We don't really have a lot of earnings today, so we'll dive deeper into all this China Trump stuff, because no big earning. Really this week, there's like some earnings, but the next big one is NVIDIA. Most of the big earnings are already done for this cycle. And so we'll have NVIDIA coming up soon, and then we'll keep going up there. I will keep you guys updated on what the Democrats say, what Bernie says, what Elizabeth Warren says. I'm very curious. I'm assuming within the next few hours, they're going to have to put out a public response to what Trump is doing. And I am just really curious to see if they spin this, if they agree with it, if they concede and they're like, you know what, we think this is a good thing, or if they find a way to say that this is not the way to do it. And so we're going to see how this ends up playing out. And for all of those saying free speech, let Kris say whatever he wants. Again, guys, I could not care less if he says the F word. I just know a lot of you guys have personally reached out to me that you have kids in the background, you're in the car, yada yada. It's like, you know, someone throwing the F bomb around that many times. I don't care. I could care less. It's just, I just want to be a little bit more respectful for everyone out there who's listening to the show with you know, some younger folks in the background. So, but he was passionate, right? And I think that shows Kris's flexibility on the, you know, a lot of people just think he has TDS, or it's like first of all, he voted for the guy. Second of all, when it comes to economics, he has a different paradigm. You could disagree with his paradigm, but he has a certain way of thinking about it. But when it comes to issues that he's passionate about, he's not going to, TDS is someone saying they disagree with this policy because of how much they hate Trump for whatever external reason. Not having TDS and just being objective, even if you disagree with his economic policy, is basically what Kris did today, saying that he's very passionate about and showing his passion around what Trump announced today and explaining why he thinks it's such a good idea, even if he doesn't like, you know, everything that has happened with tariffs. So that's what we got in the context of Trump's big executive order today. What is the word of the day? It is peregrine or peregrine.
Peregrine.
Peregrine, wandering, traveling, or migrating. I've never heard this word before. His peregrine spirit pulled him from city to city, never allowing him to settle down. The book focused on peregrine figures throughout history, from Sufi mystics to punk-era drifters. All right, peregrine. Wandering, traveling, or migrating. There you go. That's what we got. We have Archer today. Okay, I didn't know we have Archer. We're not going to listen to their call, but I'll cover their earnings. Quite frankly, I don't think we're going to get any earnings because Archer is still pre-revenue and earnings. Like, they don't show any earnings per share, not even negative, because they don't have any earnings. So we'll cover the earnings, whatever we get, but I don't think we're going to get any core numbers on Archer. But yeah, that will be a big one. We'll look at that later in the afternoon as well. ASTS today after the bell. Okay, cool. So we'll look at ASTS. Let me just check. Last night I didn't see any big earnings. Oh yeah, we have Archer, we have Rigetti. That's a quantum thing, right? We have SMR, that's nuclear. And then we have Simon Malls, that's consumer. And then we have Hertz, which is Bill Ackman just took a 20% stake. So we still do have some companies. That's fair. Oh, it's Rigetti. Wait, RGTI, right? That's the quantum name, right? RGTI. Yeah, Rigetti. Okay, so we have a quantum name today. We have a mall real estate property company today. We have Archer. We have nuclear, Plug Power, the old one, energy company, and then we have Hertz, which Bill Ackman just bought. So we do have some companies that we'll look at today. Not the biggest ones in the world, but definitely we'll have some important earnings to look at as well. Oklo and VG tomorrow. Yes, that's correct. Oklo and VG tomorrow. So we'll look at those tomorrow as well. All right, cool. Thank everybody for being here. Appreciate it. We'll be back at 3:45 p.m. Eastern. If you're new to the channel, thanks for being here. Really appreciate you being here. We'll be doing a market open, market close every single day, Monday through Friday. We do a Sunday's future show, which some of you guys might have discovered yesterday as well. And yeah, I think the big story of the day is how the pharmaceutical industry is going to react to this executive order, how the Democrats are going to react to it, and then ultimately more progress on China and the U.S. Hopefully we get some more details later throughout the day as well. All right, cool. That's it. Thank you, everybody. Appreciate you all. We'll be back at 3:45 p.m. Eastern on the market close. Bye, everyone. Have a good one.